to the national agenda, build up a national agenda. We are doing it for last many years, and it has been extremely helpful for us to assimilate the zonal need with our national need developing. Many of the known faces are here, and we'll be looking forward for that one. My name is Shoibal Paul. I am Deputy Director of Sa-Dhan. I look after the industry building side, member engagement side, and the policy side. This is also learning. Every time we organize this one, we learn so much from here. This is also the opportunity for all of us, especially for Sa-Dhan, to learn from it. We have got wonderful and very stalwarts over here as a speaker. And there is a request to all of you that we always discuss about the challenges, we discuss about the pain points, we discuss about that what could we do. We have done wonderful thing from the sector. We are reaching to around 426,000 crore. This portfolio of this your microfinance is 426,000 crores, and we are reaching to around 148 million accounts of the low-income people. It's a wonderful job. It has taken us 25 years to reach here, but the journey was very good. All of you have contributed significantly in this journey. So, having told that one, let us start this one. So there is a request that let us also discuss about how the overcome strategies and also how to take it forward. We have reached to certain level. We need to go beyond it. 30% of the geography, Indian geography, is still unreached. There are many geographies, many areas where we are not reaching. Eventually, if we see the state, we see that okay, we have reached to that state, we have contributed this much, but when we go deeper, we see there are a lot of gaps. How to mend those ones, how to reach those unreached geographies, unreached population. Welcome you all. So let us start the session. I will be the MC of this event today. We do have wonderful inaugural people for the panelists for this inaugural session. If I can welcome Mr. Gigi Momin on the stage. He is ED and CEO of Sa-Dhan. Please look. Dr. Partho Roy, Director, NIBM. Welcome, sir. Our guest of honor, Mr. J.P. Sharma, CGM DOR, Reserve Bank of India. Sir. Ms. Rashmi A. Darad, CGM NABARD. Mr. Prakash Chand Sahu, CGM Financial Inclusion, State Bank of India. And Mr. George R. Tirke. Thank you. Please take your seat. Apart from Mr. Momin, now you have to come here. Please take your seat. Mr. Momin, I'm inviting you for the opening remarks and welcome address. Over to you.
Hi, good morning to all of you. Respected Partho Roy, Director, NIBM, Sri J.P. Sharma ji, CGM RBI, Rashmi Darad ji, CGM NABARD, George Tirke from SIDBI, and Mr. Sahu ji from State Bank of India, and my dear friends, ladies and gentlemen. It's really a privilege for me to welcome all of you for today's one-day conference for the Western region. As Dr. Saibal said, we have been doing this for the last couple of years, doing conferences in different regions. You know that Sa-Dhan has been conducting national level conferences for the last 18 years, and 19th conference we are going to have it on 23rd and 24th of October at Delhi. So this national conference had been happening for the last 18 years. We thought that national conference doesn't give an opportunity for everyone, especially those who are at the regional level, smaller players, may not be able to come and take part in that. So to give a feeling, to give a similar experience at the regional level, we thought we should also have regional conferences, and we had been doing it for the last 2 to 3 years. We had a conference in Chennai for the southern region. We had one at Chandigarh for the northwestern region. We had one at Guwahati for the eastern, or especially for the northeastern region. And perhaps this is the next one we are having it. Probably we'll also planning to do one more in the current year. So this being the first conference in the Western Regional Conference, I'm happy to see you all. I know that traffic is definitely a kind of a hurdle for many of the people to reach on time. Maybe some of them are still on the way. They are expected to join us. So I welcome each one of you for this conference, and thank you for taking time for being here. Let me also thank Partho Saab and the entire team of NIBM for giving us this opportunity to host this program here in such a wonderful campus, such a prestigious campus. To be frank with you, for me this is the first visit to NIBM. It's a shame on my part, I feel, having been in banking industry for almost 37, 38 years, because I was in NABARD for almost 37 years. Subsequent to that, of course, 2-3 years in Sa-Dhan. I never had an opportunity to come here. So this time when I got this opportunity, I grabbed it and came here, and I found such a beautiful campus around us, and and the wonderful people giving a wonderful hospitality. So thank you so much for allowing us to organize this and being part of this Western Conference. See, today's focus, if you see, we are given focus to 2 areas for discussion. One is, basically it's on the form of a panel discussion. There will be discussions, and of course participation from the audience is also expected. We are looking at how do we move into a new type of new products and new processes in microfinance. We know that microfinance we had been practicing for almost 30 years now, and almost a similar pattern has been there throughout. Have we reached a kind of a level where we need to look at a different model, different process? That is what we will be discussing today. And I would like to hear from each one of you, everyone, about your. Let me tell you, recently, if you see, the microfinance is undergoing a bit of challenges, I know. One of the challenges which we are facing is on the HR side. In fact, we had a conference we are also doing some thematic conferences, and we did one conference last year on HR. Followed that, we did one on compliance also. Next week, we are doing one in risk management at Kochi on 10th of September. I would request all of you to be part of that. So in HR conference, it was very clearly came out that the attrition level is causing a pain to the industry. See, we know that when a staff moves out of, especially a ground level staff, the frontline staff, if he moves out, it causes real pain to the organization, because a new person has to be inducted in, he has to get familiarized with the whole thing, and in the process, recovery can suffer. It is a little difficult time for the organization. So, how to retain the staff should be one of our major I would say, a major objective or major role. But we have not been doing it, and we are attrition level is more than 50%, 60%, and I have seen organizations with more than 100% attrition happening in a year. It's not good for the industry. So we did a study. Of course, that study is still in the final stages. I will not be able to come out with the complete observations or complete what we have seen from the study. But one point I just wanted to highlight, and that is because I'm highlighting because that is relevant for today's discussion. we found that out of the total number of people whom we interviewed who are left the organization, around 2,000 staff people we are interviewed, around 2,000 to 3,000 people we interviewed. And the people, out of the people who left the organization, 40% do not have a job in their hand. I think it's a very concerning matter, because we generally think that people move on because they are getting a better opportunity. So it is not so. There is something beyond that. What could be those reasons? Maybe the present generation may not be attuned to the kind of the model we have been practicing, the kind of job involved in that. So we need to change maybe the model, we need to change the process, and that is where the second theme is also coming into the play. There is a technology, how the technology can make a change in that. So we would be discussing on this new processes, new model, and how we can take the microfinance to the next level, to the next to the tomorrows of microfinance, how it can be. Can there be a different model, different approach to the whole thing? Probably that is what we would like to hear from today's discussion, and we'll let you know. And how much technology can help in this. So both are very linked topics, and I would like to see a good deliberation happening. I'm sure with today's deliberations, we would be enriched much more, and we will try to bring some kind of betterment into the sector. And as I said, probably this will also become part of our national conference, which will be an input to the national conference where we can also deliberate it in a larger way. So with this, I once again welcome each one of you, and I thank all the dignitaries, and especially Partho sir for sparing his time, sparing his facilities for this wonderful conference. And I thank everyone for being here, and welcome each one of you, and expect a good deliberation to happen. Thank you so much.
Thank you so much. Welcome there. So, this is a small gesture. Let us start from that side. Come, please, with a bouquet of flowers to Miss Rashmi. Dr. Roy. Mr. George. And Sa-Dhan. Then there is this lamp ceremony. Please come there. Please join.
All of us.
Now formal opening with lamp ceremony. All of you have to be there. Thank you very much. So now I will invite Dr. Partha Roy, Director NIBM, for his inaugural address. So over to you, sir.
Mr. G.G. Menon, Executive Director and CEO of Sa-Dhan, Mr. J.P. Sharma, Chief General Manager, Department of Regulation, Reserve Bank of India, Ms. Rashmi Dadal, Chief General Manager, NABARD, Sri Prakash Chandra Sabu, Chief General Manager, Financial Institutions, SBI, Sri George Turkey, Deputy General Manager, SIDBI, Dr. Paul from Sa-Dhan, my colleagues, in particular Dr. Naveen Kumar and Anjan Roy, who played some role from our part, other delegates, ladies and gentlemen. It's my great honor and privilege to welcome you to National Institute of Bank Management for the West Zone Financial Inclusion Conclave with the theme of promoting innovations and technology in microfinance. I thought this conclave, what I hear from Sri Menon and others, this conclave is going to provide a unique opportunity to bring together thought leaders, practitioners, policymakers to discuss and collaborate on innovative approaches to strengthening financial inclusion through the lens of microfinance. Today's conclave is a significant platform for discussing and promoting innovations and technology in microfinance, a sector that continues to play a vital role in reaching the unbanked and undeserved segment of our society. In fact, when Dr. Naveen Kumar approached me for inaugurating this particular conclave, I was a little hesitant. As a macroeconomics, I know very little on this, but then I realized that in terms of the national economic goal, if we use the catch-all word growth with equity, there's nothing better than microfinance. It ensures, of course, equity because it goes to the poor, downtrodden sections of the society and ensures it brings them to the productive ambit of the society and the economy. Therefore, in some sense, microfinance is the ideal way to ensure growth with equity in this country. So you all talk of, you get different numbers. India has a 5 trillion economy. Day after tomorrow, India has a 35 trillion economy, one of the business leaders have said, within the next 7 to 10 years. And then India has a 90 trillion economy after maybe 25 years. So since these numbers come in, we often realize these are not magic numbers. We need to work hard towards achieving these numbers. And one of the key ways of getting these numbers is the microfinance, as it ensures growth with equity and it ensures growth with distribution. And in this, we believe that technological advancement, when integrated thoroughly into microfinance, can transform the way we deliver financial services, bringing greater efficiency, accessibility, and impact. Over the past decades, microfinance has emerged as a cornerstone of economic development strategy that I mentioned, providing credit to the underserved communities of small-scale entrepreneurial ventures. This form of financing aims to empower individuals who traditionally lack access to formal financial services. In recent years, efforts to scale this program have intensified. It was driven by renewed commitment to reducing poverty and fostering inclusive growth, demonstrating that microfinance is not just a financial tool, but also a powerful catalyst for broader social and economic transformation. The microfinance industry in India is a key player in promoting financial inclusion. focusing on providing credit to the underserved population. It is evolving rapidly, leveraging digital technology to enhance outreach, reduce cost, and improve efficiency. And these innovations are transforming these sectors by enabling faster transactions, better data analytics, and stronger consumer relationship, thus fostering economic growth and development for low-income communities. As we embark on this journey together, I encourage each one of you and the other stakeholders to actively participate in the discussion, share your thoughts and experiences, and collaborate to shape a more inclusive financial ecosystem. As Mr. Menon rightly said, the sector has been facing challenges, and it's those challenges that makes our life interesting. Otherwise, life is very dull, absolutely stationary state, like the state of nirvana. Let us all work together a future where everyone has access to the financial services they need to thrive and prosper. Once again, I welcome you to this West Zone Financial Inclusion Conclave and look forward to fruitful and engaging discussions ahead. I have seen the basic agenda. It includes number of themes, both newer products, newer processes, as well as technology. Thank you very much. I wish all of you a very productive and inspiring deliberation and discussion and a productive day. Thank you very much.
Thank you, Dr. Roy. Yeah, you are very right. Growth with equity and growth with distributive justice, which is really necessary for our kind of country. Thank you for this one. Indeed, our life is very interesting. Every day we are seeing new things are coming up in different geographies. So we have to travel there, we have to engage with them. And yes, our life is really interesting. I'm telling you, this is one of the sector where we have seen extreme diversity, troubles, challenges, and overcome strategies as well. We are also very, very much thankful to our regulator, Reserve Bank of India, to support us in everything and thing. They understand us like anything, they support us like anything, and in India, it's a unique thing that's called SRO, Self-Regulatory Organization, intermediary level between the regulator and this microfinance sector. So Sa-Dhan is also designated as Self-Regulatory Organization by Reserve Bank of India. Our next deliberation will be by our guest of honor, Mr. J.P. Sharma, CGM DOR, Reserve Bank of India. So, sir, over to you.
Thank you, Sabul. Good morning, everyone. My friends on the dais and those present in the audience. Good morning to all of you, and welcome to this conference. First of all, let me thank Sa-Dhan and NIBM for inviting me here for this brief talk. I had attended one annual conference of Sa-Dhan about 2 years ago, but after that I was not able to attend any of their conferences. In fact, Gigi had been inviting me for various conferences, but somehow I could not attend any one of them. So this time I could, and it's a pleasure being here and interacting with you all. It's a good chance to meet you all, because it's a two-way communication. I mean, sitting in the central office, we can issue circulars. It's just a one-way communication. It's always good to have views of the other side also. The theme of this conference, as you have seen, innovation and technology, I'll slightly digress from that. I'll give you a little bit of background of microfinance regulation. What is the rationale behind that? What is the objectives of revised microfinance regulation which we came out in 2022? That will be slightly brief, but my aim would be to assess whether that framework has really achieved what it wanted to achieve, and if yes, then what have been the takeaways from that, from those achievements, or if there are some gaps, or what else is remaining to be achieved. what should be done. So those things I'll try to cover in maybe 10-15 minutes. I mean, it sounds a lot, but then I'll try to make it brief. See, as we know, the microfinance regulation, it came about after Andhra Pradesh crisis. And the genesis lies there. Before that, there was no institution called as microfinance institution. After that crisis, we created a specialized category of NBFCs, MFIs. For that, we had the regulation. Now, during that time, the entire microfinance sector was served by those NBFCs. But then, as has happened in other areas of credit, like in gold loans and all, so NBFCs, they pave the way and then other lenders follow them. Here also the same thing happened. Then other banks also started coming into this sector. The result was that the share of MFIs, NBFC MFIs, it fell from 100% to maybe about 30% in 21. So our regulation, which was intended for the entire microfinance sector, it was applicable only to 30%. The remaining 70% of the portfolio of the sector was not covered by our regulations. So that's why we came out with regulation in 2022. The main feature of that regulation was that it was activity-based. It was not entity-based regulation. It was, in fact, first activity-based regulation which was issued by the RBI. Whichever type of lender engaged in MFI lending, all those lenders were covered by this regulation. I will not go into details of what was the regulation, but I will tell you what were the objectives. The first objective was to end the arbitrage. Because we are shifting to activity-based regulation, the objective was obviously to end the arbitrage. The arbitrage was, under the regulation, the MFIs were covered by strict regulation, whereas other lenders which were not covered by those regulations were free to do anything. For example, banks could do anything, whereas MFIs were subjected to various types of regulations, which were stifling and stopping their growth. So we wanted to end that. We wanted to have a level playing field. So that was the first and foremost objective. We also hoped that if we end the arbitrage, it will lead to increased competition, because MFIs which were being stifled by the regulation, they will be free and they will be free to compete with banks. So we thought that it should lead to competition. Now obviously competition has its benefits. These were the two major objectives for the sector. From the borrower's point of view, we wanted to end over-indebtedness. I mean, this is a perennial, evil which has been plaguing the sector. Ever since, in fact, even before the regulations came, over-indebtedness is the one biggest factor which is impacting this sector. So we wanted to end it. How we wanted to do it, that I'll just tell you a little bit. The next objective was to protect the borrowers, because there was arbitrage. 70% of the sector was not being covered by the earlier stringent protective measures. So we wanted to protect the borrowers, so we made it across the board. So that was the fourth objective. The fifth was to give flexibility to the lenders. So they could design any kind of product to suit their requirements, to suit the requirements of the borrowers. They could go for even daily recoveries or whatever kind of, that was the flexibility which we gave. So these were the 5 broad objectives which we had in mind when we came out with that regulation. Now since this regulation came out in 2022, it's been more than 2.5 years now. So we thought, let's assess whether this regulation has really served the purpose or whether it has really achieved the objectives. So we did a study about 6 months ago. It took us some time. We collected a lot of data. So I will share with you what are the major findings of that study. First, let me talk about the positive observations. The positive observations are that in general, this framework has been conducive for the growth of microfinance sector in general. There are some observations which will support this conclusion. the main observations are like this. First is that the growth rate of microfinance sector has returned. I mean, in fact, it is better than pre-COVID days. The microfinance loans are growing at a faster rate as compared to over average credit growth in the country. That is the first one. The second one, absolute number of microfinance borrowers has increased by about 45% in last 2 years. It's around 8.3 or 4 crores now compared to 6.7 or something like that. So 45% growth in number of borrowers, microfinance borrowers. It's a good number. Third, NBFC MFIs, which had been losing their market share to banks, they have regained their market share. The market share had come down to about 30-31% in 2021. It has again been touching 40% recently. In fact, NBFCs, which were number one in market shareholding earlier, they had lost that position to banks. Now NBFCs have again regained that number one position in the market share. So that's a good achievement. Add to that, I spoke about increase in number of microfinance borrowers. If we see that in terms of geographical spread, there also NBFC MFIs have done well. The number of districts where their presence is there has increased substantially. Earlier the increase used to be probably 10 or 15 districts in a year. Now last 2 years the increase in number of districts is quite significant. So there is a lot of improvement. And then of course we have empirical evidence where we can see the buzz, the activity in the sector. There are a lot of M&As, IPOs, things like that. So it shows that investors have started regaining the confidence in the sector. A lot of investment is coming. So in that sense, there is a lot of activity in this sector. So we do feel confident about this sector. So in that sense, so that's why I think this framework has been conducive to the growth of microfinance sector. So that was the good part. Now let me talk about some of the gaps where we feel that there could be some improvement, where the sector has to work. There is nothing new which I am going to tell you. These are the things which have been there for last 15-20 years, and now they are still there in the new form. One factor which I spoke about was indebtedness. It was there, but even the Andhra Pradesh crisis was because of that. This thing remains even now. Indebtedness is there in new form now. In the earlier regime, we had a hard cap on the loan which could be given to the borrowers at 1.25 lakhs. So what the lenders were doing was they were lending to the limit. Everybody was getting 1.5 or 1.25 or 1.1 or 1.2, around that range. So whatever be the income of the household, everybody was getting the same amount of loan. So that led to indebtedness. Plus there were multiple lenders to each of the borrowers. So those kind of things. To cover that, we removed the cap on the maximum loan. Instead, we said that there should be a cap on repayment ability of 50% of monthly income. So that's what we said. But now what's happening is all the borrowers, almost all the borrowers, they are being assessed to be having annual income of 3 lakh. That was the conclusion of the study. Now it cannot happen that income of the borrowers has increased suddenly from 1 lakh to 3 lakhs in a matter of 1 year. That obviously, something is wrong. So this is a new form of indebtedness. The second thing is, it's very most talked about, but that is very important, is rate of interest. Our top management has been speaking about it, and we also saw in that study that all categories of lenders, they have raised their interest rates by 3 to 4% after COVID. Now, during the initial periods, we could understand because there were increased write-offs and also that had to be covered, increased credit costs. So that was understandable. But now, since almost 15-20% of that portfolio has been written off, now there is no need. Cost of funds for none of the categories has increased. For MFIs, NBFCs, banks, cost of fund remains the same. The only differentiating factor was the credit cost. That has been taken care. So now, where is the need to keep that interest rate at such a high level? And we can look at this factor from various angles. Another way to look at it is banks. They have cost of funds of 5.5%, at max 6%. MFIs have cost of funds of probably 10 or 11%. NBFCs maybe 9%. SFBs somewhere in between. They all charge the same. Now, why should a bank which is having cost of fund of 5% charge 25%? No, I am not naming any bank, but in general, this is the thing. Now, obviously, people are taking advantage. So, this was one aspect of, one way of looking at interest rates. The another way to see here is, there is no pricing as per the risk. Everybody is being charged in the same bracket. One of the MFIs is charging between 25 and 26. Almost 80% of borrowers are being charged at that rate. It cannot happen that all of them have the same risk profile. So risk differentiation is not there. That's another thing which we saw. There were a few things which, in the interest of time, I will not go into details. But then this was the second factor. The third point which we saw is recovery practices. This again is age-old evil, which all of you must be aware. But then this continues in a new form. So earlier there used to be physical harassment. Now there will be digital harassment. But harassment remains. But see, I'll go into philosophical aspect of it. If there is a financial loss, you can compensate. But how do you compensate loss of dignity? There is no way you can compensate. I'm not saying that you should not pursue a borrower for recovery, but then it has to be done in a dignified way. That's why we brought about several aspects in the new framework to improve protective measures and as well as bring all the lenders in this framework, so that all the borrowers were covered into that. So these three issues are very important. Technology, innovation. These are basically means to deliver a service. But the underlying concept of customer protection, interest rates, those things remain the same. And as a regulator, we are concerned about that. Smaller practices, malpractices, procedural issues, our supervisors will come, they will write in the report, you will rectify, that will be closed. But these are the theoretical constructs which must be adhered to. Whatever way of delivery you choose, whether it is through digital or physical or digital or whatever, these 3 or 4 cornerstones, they must be respected. That is our expectations. In fact, on interest rates, our governor, deputy governors, they have spoken a lot. So, it's a serious issue. Obviously, that's why governor is speaking about it. So, if there are some bankers in the audience, I will definitely request them to consider their interest rates. I'll request everyone, but then bankers must introspect harder. Because we spoke about competition. Competition will come only when banks start reducing the rates. I understand they have a difficulty in short term, but then they have to take the lead, and then only interest rates will come down. That is why I am able to talk to here in a selective audience, but then that is why SRO, Sa-Dhan and other SRO also, they have a larger role in this. And in fact, we keep on interacting with both of these SROs, and I'm happy to note that both the SROs are doing a good job. They are trying to develop this sector, but then they have to, inculcate the culture of customer service also. That will be the expectation. That's all I had to say. Thank you.
In fact, very well said by J.P. Sharma ji. One word of appreciation and thanks to you. And see, if the new regulation had not come in time, after COVID, many of them would have migrated to So it was a very timely action from their side. It has helped the MFI sector to sustain. There's no doubt about it. Now the points what he says is very right, that we will take care of. Thank you so much.
It's great to see that the regulator has given a point of appreciation for the SRO. That also is great to see.
Thank you, Mr. Sharma. Actually, Mr. Sharma has helped us to put the words forward. If it is from the regulators, people will really take it serious. That's what we are telling to the members and everyone. Now you have listened from the horse's mouth, from the regulator, that where lies the challenges. Definitely, we need to assure him that we will be taking care of all those issues and take our industry forward. We have done wonderful job and we have to do it in the future also. There are many spaces, one of the institutions of Sa-Dhan, I need to tell you that if there is, they create the market, and if they're seeing that there are two institutions working on that geography, they're moving out of it. We have that kind of institutions also. So thank you, Mr. Sharma, once again. Now I would request Ms. Rasmi Taran, CGM NABARD, to deliver the special address on development finance, how development finance is helping us to take the agenda of financial inclusion forward. NABARD has been extremely kind to us in everything. Thank you, ma'am. Over to you.
Respected GG Maman sir, Dr. Partare, Mr. Sharma, Mr. Sabu, Mr. Pirke on the dais, senior bankers from Bank of Maharashtra, SBI, who are in the audience, and maybe some other bankers also, maybe I don't recognize everybody, but dignitaries who have come, very good morning to all. I actually am, I wanted to say certain things, but then there are, the speakers before me have inspired me so much. I will be touching upon a few of the points over there also. First of all, I would like to congratulate Sa-Dhan for the journey that they have undertaken in the last 2 decades and the role that they have played in the microfinance sector. Having a presence in 600 districts in almost all the states of the country, and I think 220 partners over there, I think with a client base of nearly 16 crores. It is your accounts. So that's a long journey, and to be recognized as an SRO by none other than the regulator, also accepted as a resource organization by SRLM, I think that is huge. They have played a major role in bringing this sector together and the MFI sector, and I think Sharma sir has very nicely indicated what are the issues in the sector and how necessary an SRO is to regulate or to self-regulate rather this sector. Speaking from this angle, and when we are speaking of microfinance and development finance, I'd like to bring the attention of the House to the fact that bankers have been the first lenders in microfinance in India compared to any other country. So I really give credit to the bankers in that area, and they have been our very strong partners when we started the SHG Bank Linkage program way back in 1992. In fact, I would go to the extent of saying that the microfinance sector, which is now well established through the MFIs, has its roots in the SHG Bank Linkage program, where credit discipline was developed in the so-called unbankable clients, or they were not even clients to that extent. To make them clients and to bring them to that fold of and bring them to the bank, the SHG Bank Linkage played a very major role. And the development of credit discipline, which was so important. Today, when we talk which bank lends without collateral, but you want to lend to a microfinance lender without collateral. And where does that come from? From the fact that, or the belief that this client will repay. I know bankers who have gone out on a limb to finance even those SHGs who had not repaid their installments on time, just because of the support or the confidence they had that no, this is only a temporary issue and they will repay later. I think all those bankers have retired, most of them have retired by now, but they were there, and this was the journey. This was entirely a multi-pronged approach that we had adopted at that point of time. I'm just delving into a little history, not because I want to glorify the role of NABARD, it's well established, but the fact that some of the points that our speakers spoke about earlier, it was a well-entrenched concept because we did a lot of work of awareness creation, not only amongst the clientele, but with the banks at all levels, right from branch managers to field functionaries to mid-level, and also the corporate. That is how each bank had a corporate policy for financing of SHGs and SHG clients. That was the history. And having done that, the SHG concept itself was highly process-oriented. The fact that you rely on the capability of the SHG or the individual member to repay on time comes from the fact that they have grown together, they have been together, they understand each other better, and that group dynamics has developed to such a level that they can take the liability or the responsibility for repaying their group member's loan only because they know that yes, this person will pay, or if it doesn't pay, she has a genuine problem. So this process, which took so much time, today it has been shortened. No doubt times have moved forward. We have all come to the point where we think that everybody knows what's an SHG, everybody knows what's an JLG. We've shortened the process. And today JG Maman sir was talking about attrition. That why is it that even people who are in the, you may not be having a job today, but not ready to work in this sector. We as NABARD are in the business of nurturing, I could say, in many ways. Nurturing is most important. So it is a generational change that neither the people want to spend that much time on understanding and growing, and neither the clients who are now, who know that it's easily available, neither they want to wait. So this is a dilemma, and this is the change which is here to stay. There is no point in talking about it in the sense that whether it will change or no, but what we need to realize is that how well we understand the client today. Even if we go through the JLG mode, there has to be some kind of cohesion between the 4 or 5 members within the JLG who could understand that whose liability they are taking. So as long as that process is gone through, and as long as that kind of group dynamics has developed or the maturity has developed, I don't think that the loans are going anywhere or the repayments are going anywhere. There is a need for finance or credit at the lowest level, which I think has been amply proved by the growth of MFIs in the country. Banks, where public sector banks are concerned, I think the rate of interest mostly, sir, are in control, like because we have been attending SLPCs and all that. But private sector banks, as you said, private sector banks could be charging much higher. Most of the public sector banks are not only charging less, but also bearing the brunt of the NPS that come over here. The SHG movement today is huge in the sense that it is about 1.44 crore SHGs, touching about 18 crore households. The per SHG account loan is about 3.25 lakh today. This is the level where they have reached. And today, the need of the hour is how can we finance a microfinance individual or an SHG for a livelihood creation or for an activity rather than for consumption. So where rate of interest was concerned, whether we can reduce the rate of interest at least for livelihood loans, that is the need of the hour. Which livelihood activity or which project will have an IRR of 23% or 24%. So if it is a consumption loan, it can be understood that, okay, you are charging higher. But where there is a livelihood, where there is an activity, where it is supported with some government subsidy, can we think of charging a little less? This is the need, this is what we need to think of. Another aspect which I think most of the MFIs are working in are in renewable energies also. They are working with in agriculture. In fact, most of the MFI loans, I think 66 to 67% is in agriculture today. Even if a loan is taken without any purpose, you can guess that if it is in the rural area, it is going for agriculture. That it is almost clearly indicated over there, based on the trends. So one aspect was that how can we how can we know our client better, and which is a time-taking process. Believe me, at the ground level, the thought processes are so complex. I had a maidservant who wanted a loan for her brother's wedding. I asked her, you have got 2 lakh in the account, why don't you use that? You have money. Why do you want to borrow that too from your SHG also? Even they will charge about 17-18%. She said, no, I will not touch that money. That is for an emergency. But I will borrow here, and I know this is my target because I have borrowed. And so आगे जा करके वो एक मराठी में शब्द है काटकसरी, वो कैसे भी करके हम उसको कंट्रोल करेंगे, एक्सपेंडिचर कुछ भी करेंगे and we'll pay. But I will not touch that. So the requirement is huge. The understanding is great that you have to repay your loan, otherwise you will not get the future loans. But when will our clients become clients of banks? All said and done, today the complete array of activities or complete array of financial products are coming from banks. The way to go forward is is financial inclusion. So credit aspect is taken care of, the savings, the social security, insurance also is taken care of a lot through the MFIs. But these are aspects which come from banks. And there is a need that these clients grow to that level and become regular customers of banks. Even today, despite the great understanding that we have in India about microfinance, there is the lower layer or layer of society which is not yet, even today I feel bad to say that, but the unbankable still exist. The poorest of the poor still exist. And there is no one to look at them also. So in fact, NABARD has now taken up a project where we can introduce livelihood activities in the hardcore poor, and we are trying to see how we can go ahead with that. It has just been launched. So as usual, we like to go to areas which are difficult. So let us see how far we can make a dent over there. having said these points, I feel that there are 2-3 areas where we need to go forward. One is financial inclusion and all aspects of financial inclusion, which is savings and social security. Even today, I think Bank of Maharashtra, they will tell you that nearly only 20-25% of the clients are covered, who are eligible to be covered under PMSSBY or PMJJBY. 25 or 30% are covered. There is a huge gap. People don't want to come forward. They don't know that they have, they have to keep money in the account and they have to pay their installments premium. So this is something that you can also, the MFIs also should take care of, because what I feel is that ultimately it is these clients, financial inclusion is an unmet or unarticulated demand, I think, of the client. They want money, they want livelihood. Everyone wants an income. But social security is also important to safeguard or ring fence their risks. That is a understanding which very few have. So these are aspects which need to be covered. A second aspect which I had in mind was that with so much, with the government of India having so many schemes coming forward under agriculture, even recently 14,000 crore have been announced by the government of India for various schemes. Is there a possibility where MFIs can work with banks for propagating these schemes? Today there is a Lakshmati Didi that has to be done in the state, and the SRLM, MSRLM is struggling how to achieve these targets. So wherever there is co-lending amongst banks, with banks and with MFIs, this is an opportunity, I feel. The government of India has never been so active in fact, the great push that has happened for financial inclusion, I would say, has come from the government of India in the last 10 years, right from 2014, what they have done with PMJDY and the social security schemes. So partnering with these government of India schemes and the state government schemes is one aspect which we can think of. And the first thing I would say is that how do you increase the credit absorption capacity? So can we have a credit plus approach? What are the areas where an MFI can also support the MFI clients in their livelihood activities? I was in fact very happy to note that most of the MFIs are also having activity-wise data. Most banks don't have it today. Their CBS does not permit. So, but you go to MFIs, they are still able to give somewhat detailed data of what is the activities which they have financed for. So, with these 2-3 suggestions, I think I will stop over here. The scope for activity and the scope for growth is huge where in microfinance in the country. I think we should thank Reserve Bank of India for opening the doors for SHG bank linkage program in 1996 and for MFIs later, as Sharma sir has already mentioned, and their continued improvements in policies which are coming forth. So in the country, if you see, I think one of the best regulated sectors in the world, the MFI sector in India could probably compare with the best in the world. Thank you so much. I'll leave you for further deliberations during the day. Thank you.
Thank you very much, Rashmi. It was wonderful to hear you. Couple of points, definitely nurturing. Yes, that's one of the things we need to really do, and NABARD has been doing it. And I would like to tell you something, probably you know. We wanted to create a portfolio for water and sanitation, and the rate of interest of the banks, we are getting it in regular rate of interest. We couldn't get it from NABARD also. Then Nav Samruddhi, somehow we started talking to them. Yes, Nav Samruddhi Mahip is here. We started talking to them. Nav Samruddhi gave us a bit of money. Then we cannot also, Nav Samruddhi directly couldn't give it to the smaller MFIs. Then we had to load it to FWWB, and Bhatt was so kind for this one. He accepted that one, and that's how we given fund to the source the fund for the smaller MFIs. Yes, you have done wonderful, indeed a very good job for everything. And other thing you are talking about, which I do agree completely with you, on the rate of interest, possibly we have to look at it at this point of time. Thank you very much, and we would like to talk to you from Sa-Dhan on this livelihood program for the hardcore poor, how we can work together and make it really happening on the ground. Thank you, it's very good deliberation, and we would appreciate that one. And the second, our next deliberation will be from Mr. Prakash Chand Sahu ji. He is CGM of Financial Inclusion of State Bank of India. He will be deliberating on this, the banking and the financial inclusion. How are we doing it? What could be the way forward? What are the challenges? Over to you, sir.
Distinguished guests on the dais, ladies and gentlemen, very good morning. I am Dr. P.C. Sabu. I am heading the financial inclusion version of State Bank of India, and I am practicing it for last more than 1 year. So I will be discussing certain practical aspects, not in theoretical part. As you know, that financial inclusion is an effective tool to break the vicious cycle of poverty. I have been a student of economics, and जब हम लोग economics पढ़ते थे, that is in 97, 98, oh sorry, 88, 87, उस वक्त एक सेंटेंस होता था कि भारतीय किसान ऋण में पैदा होता है, ऋण में ही जीता है और ऋण में ही मरता है. I am sure that some of you, particularly Dr. Partha, will be agree with me. That was a very common quotation, but that is now not true in today's world in our India. And the credit goes to the government organizations as well as to NBFCs and microfinance. Microfinance is a new concept which introduced in last 1 decade. So my discussion will be that how we can use this FI. First, what is this FI? FI is not a destination. FI is a journey basically. FI starts with the account opening. In 15th August 2014, our Prime Minister made one announcement that everyone should, means every household family should have one PMJDY account. It started from 28th August 2014. So this last month, 28th August, we have completed 1 decade. And now the total number of accounts are 53 crore plus, means 53.84. We can say safely 54 crore accounts. And out of these 54 crore accounts, 15 crore accounts are with SBI. Okay. And as CGM RBI was talking, that MFI has covered almost 8.4 crore accounts. So still a very good opportunity to you people to go ahead. Only sky is the limit, because this 54 crore is not a static number. Once you will reach it there, then this number will further, dynamic numbers, it will further move. So that is one way of seeing the things. But we come the entire journey how it works. The journey starts with opening a saving bank account with zero balance in any bank. The next step is making the transactions, remittance purposes. After that, it comes to the credit linkage. And after credit linkage, the next step is the social security scheme. So Government of India has introduced 3 social schemes. Prime Minister Jivan Jyoti Bima Yojana, Pradhan Mantri SBY, and then APY. This is a pension plan. So these schemes are also package of this project, and in between the major chain, the credit you people are taking with the help of banks also, because now we are having the JLG partners also. I share some thoughts, and I will also cover some of the issues raised by CGM, RBI, and CGM NABARD. That CGM RBI was talking about the higher interest rate and atrocity in the recovery. Okay. Most of the JLG partners means are also our business partners, means business correspondents. We are having 25 national BCs. Out of that, almost 18 to 20, they are also in the NBFC or microfinance transactions. So what we observed, that a major reform is required at the microfinance institutions and NBFCs to improve the corporate governance part. Because initially it was a little bit unplanned, because government wanted to give the directions, bank also introduced, regulator also was very liberal, and so many MFIs and NBFCs came in the area of business. But now is the time is coming that these NBFCs and MFIs should work for the improvement of their corporate governance. That I am telling you on the basis of my experience with my BC partners. That is one major area where even still when I interact with the CEOs or promoters of the NBFCs, they find it's a very costly affair. But please believe me, in the coming time, if they will not improve with the time, proactively taking the action in this direction, then definitely either regulator or this SRO, that Sa-Dhan and the other SROs which RBI is promoting and giving recognition, they will come in the picture, and then the cost will increase many more times. So that is one thing. The second question which was raised by CGM RBI was the recovery part. So the other picture of this entire episode comes with that how we can improve the awareness among the people who are actually taking the loan from MFI or through the microfinance of the NBFCs. So here, SBI is also having one, that financial literacy camp. SBI is having more than 350 such camp, and every year we are giving training more than 15 to 16 lakh people. This year our target is 20 lakh people to cover under this activity, that they should be made aware of about the financial products, process, and their rights, how they should use it, and how they should protect from the cyber crimes. As the madam was talking, gave one example of the maid. So that particular lady, she is very much aware that my corpus, the present corpus, is not for the immediate needs. She wanted to borrow the loan. So all these insights the people get from the literacy part. RBI has also introduced one new concept. The banks are having the FLC, and RBI has introduced CFL, the Center for Financial Literacy Camps. So this year RBI has increased the number on a very higher side. SBI has introduced 600 CFL. They are also doing the same thing, but they are doing at the block level. So this is one part, but I would request that MFI and NBFC should also come forward, and they should also make the campaigns, arrange the camps, and make the aware of all your borrowers. So they should use the fund which they are borrowing from you people for that particular purpose, for why they are taking it. And they should ensure that the repayment should be made in time. So definitely, once this channel will be further strengthened, then the cases of atrocity can be, I think, sir, can minimize further. Another thing that madam was talking about, the unbankable areas. So that is really a big challenge. Still, we are having a large number of, because India is a country of villages where we are having more than 6 lakhs villages, and every village we can't have the bank, because you know the banking facilities have a certain cost. So what is the alternate? Alternate comes in the form of BC and CSP's collaboration. CSPs, customer service points. SBI is having almost 83,000 CSPs across the country, and we are very actively having this CSP concept in our northeast part, where very distant area, and even the infrastructure is not available, proper infrastructure, building, networking, electricity, all these facilities are not available. But even we are using this CSP channel, and that is very successful. Nowadays, daily transactions are more than 32 lakhs in SBI CSPs, in this 80,000 plus CSPs. And moreover, these CSPs, they are just working as at par with branches. All the services except this disbursement and loan sanction part, all the services which are available to our branches, 32 services, these CSPs are providing to the local customers in the nearby area. So that can take care to some extent to the unbanked areas. And one more thing, that last year we introduced one doorstep banking, where we have designed one tab that is very safe and secure, and it is being used by our CSP partners. They are visiting to door to provide this facility to the customers. Not all 32, but around 30 services, because passbook printer is not part of that. So he can give a small receipt, but passbook printer cannot be printed on this door service. But otherwise, all the services which are available in our branches, you have seen that private bank agents, they have this one tab. But no private bank can think of a tab facility for a underserved or unserved population of this country. So the bank has introduced, and already we have deployed more than 2,000 tabs, and we are in the process to make it more popular with increasing the number of services. So in the coming time, madam, that will also take care of this unbanked area part to some extent. We are also having this LDM, lead bank scheme. There are 272 lead bank managers which are working at the district level. So they can also be the part of NBFC, MFI in the credit disbursement, and on the other hand, they can also become the partner on timely recovery. I just share one very interesting thing that will definitely help you to take more customers on your side. That RBI has introduced one facility, RCT. I don't know how many you are aware of that. This regional rural self-employed training institutes. SBI is having around 152 institutes. And every year, we are giving training to 1 lakh people. The vocational training, that after completion of training, they can start their own business. As Mr. Momen was talking about the attrition, there may be certain reason that nowadays people are more interested to start their own business. So this RCT part, almost 60 to 70% they get the credit linkage from our own branches. But still there is a kitty which can be tapped by you people in the collaboration of RCT. I am talking only for SBI RCT, but the other nationalized banks are also having this RCT concept, and you can think of that how many people are getting training there and how you can get connected for the credit linkage. So that is another way that it can be a better way for the credit linkage and assured recovery of the loans given by you people. So I think these are because time is already overshooting, I have so many things to discuss, but these are new ideas, new opportunities which you people can take, and once your volume will increase, definitely your cost will come down and rate of interest will also come down. Thank you very much.
Thank you very much, Mr. Sa-Dhan. And yes, State Bank of India has always been a pioneer in the banking segment, not only in India, abroad also. I have talked to a couple of bankers outside India. They look at State Bank of India and their interventions, what they're doing, and what are the technologies especially they are adopting, all these things. So thank you very much. We got to know a lot of things from you, and yes, I have seen your CSPs in the far-flung areas of Northeast. They are also doing very good work. I have seen that one. Yes, thank you very much. So now I request Mr. George R. Dilke, DGM City, for special address on enterprise promotion. This is one of the segments we are looking for, and City has been a major facilitator of it. So over to you, George.
A very happy morning to all. Distinguished members sitting on the dais, 5 practitioners, body corporates, and respected members. It deemed it privileged to be part of this conclave, and my sincere thanks to Sa-Dhan for having me here to share my thoughts. Being the last speaker throws you a challenge as well as gives you an opportunity. The challenge is to summarize all your thoughts in a stipulated time and opportunity to sum up. So I am taking it as an opportunity. Let me just give you a brief about myself. I'm George Sept, DGM City, and I've been working with the microfinance sector for the last 5 years. So I have seen the sector very closely, ups and downs, post demonetization, COVID impact, new regulations. So I have seen so many ups and downs, and one thing is very good about this industry, the industry has always come back and shown its resilience. The last 2 years have been great for MFI sector in terms of portfolio growth and also in terms of returns. However, during Q1, a slight uptick on the stress level has been seen, which I'm sure all members are aware of. Whatever the previous event happened in the microfinance sector, be it AP crisis, demonetization, COVID, or any other crisis, they are all were external crises. But this is the time it has been treated by our own practices. So I think this is the time to reassess our process. Maybe this year is the year of consolidation, reassess our process, reassess the income assessment model, multiple lending, indebtedness of the borrower, and increasing average ticket size. And I think these things needs a relook. But I'm sure with a good monsoon and festive season inside, MFI sector will pick up and will have a reasonable growth in current FY also. And over the years, the questions have been asked about the impact of industry, what impact microfinance industry has made. The sector has done a tremendous job in financial inclusion and financial literacy. And as a banker, I have had the opportunity to visit various MFI beneficiaries in different geographies. And let me tell you, they are very much aware of timely repayment of their installment. So as far as financial literacy is concerned, the MFIs have done a tremendous job, and they deserve a big applause for that. I was just going through the Q1 number for FY25 as on June, and there are 8 crore unique borrowers, and our portfolio outstanding is around 4.25 lakh crore. So as far as financial inclusion is concerned, MFIs have done a good job. However, the question remains before us that have you made enough impact to change the livelihood of the rural population of low-income people? If any borrower, even after completing 6th or 7th cycle, is eligible for the subsequent cycle, then the question needs to be asked, what was the purpose of the previous loan? How it was utilized? SIDBI, in association with Sa-Dhan, and we are conducting 2 studies, and very soon we will come with draft studies ready, and very soon we will come with that report. Over the years, group lending have evolved over the years, and urban microfinance program is being explored as an increasing option. So the way forward is individual lending to create more enterprises in India. Selective individual lending works also for MFIs. Their relationship with their loyal customer goes long, and losing the matured customers and trusted customer because it does not fit into your income criteria, you are losing your best client. So here the individual lending with slightly bigger loan size will help the individual to set up its own enterprises. Sept Prayas scheme is one of the endeavor to support small enterprises at the bottom of the pyramid through loans up to ₹5 lakh, extended at a very competitive rate through partner institution. And most of you MFIs are aware of this Microfinance Prayas scheme. Most of the MFIs are now partner of our Prayas scheme. So in addition to reaching to MSME directly, customer Sept is also taking other lots of initiatives. Some of the initiatives like GST Sahay project. Sept in association with online PSB loans has built GST Sahay app, which is a paperless, collateral-free and cash flow-based financing. And the other one is MSME formalization project. Sept in association with MSME Ministry aims to create an NIBM assist platform to help the registration of informal macro enterprises. There are other schemes like MSME Vyapar credit card. Sept is working with IBA for MSME Vyapar credit card, credits we are handling. So there are lots of initiatives Sept is taking to promote enterprises in India as per its mandate. Now coming back to my favorite topic, that is microfinance. The best part of microfinance industry in India that we are very closely associated with each other. And many thanks to Sa-Dhan and being the SRO of the industry for doing the excellent work of keeping the industry intact. And I think JG Memon sir and his team deserve a huge round of applause. Sept and his association with MFI sector is quite long, and believe me, whenever I go for MFI seminar or any meeting, it feels like meeting your own colleague. So I can see some of the known faces. Rao sir is there, Ganesh ji is there, Sain Mehta was there that side. So it's like meeting your own colleague. So Sept has been with microfinance sector since beginning, and on behalf of Sept, let me assure you all that Sept will always be with the sector in every possible way. And my best wishes for the entire whole day event. Thank you so much. Thank you.
Thank you, George. One of the things, Sept, they have been pioneer in a lot of things, but one of the things we definitely appreciate is formalization of the enterprises. We have done a lot of things, but we couldn't get the fund directly from anywhere. If we formalize them properly, then they can get direct funds from, like, your lot of subsidized fund from government and other agencies. That's what should be the progress forward. Thank you very much. Thank you all of distinguished panelists. We have really learned from you. Now we would like to extend a small token of appreciation. So, Mr. Maman, if you have. First, Rashmi, that side, from that side. So, Ms. Rashmi, there are CGM NABARD. Then, JP Sharma. Wow. Then Dr. Partha Raj, Director NIBM. George Tirke, DGM City. And Mr. Prakash Chand Sahu, CGM FI State Bank of India. So the panelists, if you can come front, and there will be a photograph session. Yes, please take the photograph. Thank you very much. So next is tea and networking break. It is for 15 minutes, so around 11 past 50, if we can once again come back to the hall. How we standing, what kind of things are there? So now I'll invite Ms. Shruti Joshi, Head of Insights of Equifax, to give us and orient us on the fact sheet, on the data, on the information. After this presentation, you can also ask her a bit of questions as well for better insights, for your understanding. Over to you, Shruti. There is one.
Thank you so much for providing this opportunity to me to present today, and I'm delighted to be in the presence of such dignitaries and being able to make this presentation. This data is again, as the data is as per whatever is submitted to Equifax by various credit institutions under the microfinance category. So the bureau has several categories like microfinance, retail, commercial. This presentation is just the collation of the microfinance category. We are not looking at retail category, which includes, say, auto loan, personal loan, home loans, etc. That data is not a part of this. And also commercial lending, wherein MSME, MSE segments are given lending. That also is not a part of this. So here, this presentation is just for microfinance. With that having said, I'll just get started. So the purpose of this presentation, before with the first slide, I just want to tell you what we had in mind. Because this is a conference of the West Zone, we wanted to ensure that we talk about the West Zone and also compare it as to how other zones are looking. Apart from that, we are touching some of the salient points which are getting discussed in the microfinance industry, and those sections is a little later. But the introductory slides, which are these couple of 5-6 slides, is around how different zones are compared. So if you look at the disbursement overall in terms of how the disbursement patterns are moving, we are seeing that the maximum disbursement by NBFC MFIs is happening in the North Zone, and that is the dominant segment in the industry today. The East Zone, of course, has a lot of private sector banks, getting loans getting disbursed. Specifically speaking of West Zone, because we are in the West Zone conference today, in West Zone if we see the NBFC MFI disburses around 22%, private sector banks around 13%, small finance banks around 18%, and NBFC segment around 8%. So that's how the disbursement pattern lies. Mostly we are seeing that NBFC MFIs are leading across all the zones, barring the East Zone. Now this is the disbursement as of date. If we have a quick look at how this has grown in the last 1 year, what we are witnessing is in fact the Eastern Zone, which we had seen, there was a time 2 years back when West Bengal was state 1 in terms of outstanding, and it had the highest disbursement. So that, with in due course, that we saw slippages there, and today the number 1 state in microfinance industry is the state of Bihar. However, in this last 1 year, we are seeing that the East Zone is bouncing up pretty fast. So their growth is around 20%. The Southern Zone, and state of Tamil Nadu has always been state number 1 or state number 2, continues to grow well at 20%. The Northern Zone is around 13%, and West is at around 12%. So we are seeing that West growth currently is the lowest amongst these various 4 sectors. Having said that, because we are talking about the microfinance industry, we see this data. If we were to switch the lens to retail, we will see that West Zone has the maximum growth. The state of Maharashtra is the topmost state for loans like personal loans, home loans, business loans, as we are well aware. However, on the microfinance category, this is how the growth is in terms of disbursement. Same lens, if we put on portfolio outstanding and we have a loan, again the numbers, usually the patterns are very similar to disbursement patterns. The portfolio patterns and disbursement patterns, we don't see a huge change. We are seeing similar patterns where NBFC MFIs are continuing to lead in terms of portfolio outstanding. East Zone, of course, has private sector banks leading. In the West Zone in particular, we are seeing NBFC MFIs have 45% share, private sectors around 29% share, SFBs around 19% share. So again, we are seeing a good spread with NBFC MFI dominance across the board. NBFCs, while they have a 7% share, they have seen very good growth in this last 2 to 3 years, which is not evident before that. So that is one point I would like to make, that while that bar looks the smallest, they have grown pretty fast in this last, couple of 2-3 years. And that kind of growth we have seen not just in microfinance, we have also seen in personal loan, etc., where, the growth has been more than 200%. So that is one thing that has got played out in this last 2-3 years. If you look at the growth again zone-wise, we are seeing that East dominates in terms of portfolio outstanding. So what does this really mean? Why did we show the growth of disbursement and portfolio outstanding? So this is sort of to say that East not only is giving more loans in terms of volume, but also the value of the loans are high. So the ticket sizes are more. So when we are seeing equal dominance in terms of portfolio outstanding and disbursement, this sort of indicates that the ticket size overall is pretty high for East. And they are continuing to lend at a higher range compared to the North, where it's at around 19%. South here has fallen to around 15%, and West is at around 11%. So we are seeing that East is pretty much maintaining its share in terms of disbursement volume as well as value, where they are disbursing good amount of loans as well as volume-wise also they are doing pretty well. So disbursement in South is around 20%. Outstanding is 15%. So there is a difference. So what it means is South disbursements is more volume based. Value-wise, the ticket size is lower in South. That is why we are seeing a reduction in the portfolio outstanding numbers. So, right now, we are not seeing great recoveries across states. Certain states like Punjab and Kerala, we are seeing huge signs of stress. Tamil Nadu, which was sort of known as one state which was prone to all the issues, we are seeing for the first time that there are signs of stress. So in fact, what we are witnessing is that there is signs of stress across the board. Certain states we are witnessing much larger stress, like Punjab, Haryana, Kerala. Those are 3 outliers where stress amounts have gone up. But of course, Tamil Nadu is going up. It's not as severe as this. If we look at the delinquencies, and again, we have cut the delinquencies zone-wise. Now, just to make a point, when we look at delinquencies, we exclude write-off and closed loans. So in a lot of places, we are seeing a reduction in delinquency, but that's also because a high number of loans have gone into the written-off category. So it's not that overall the delinquencies have seen a great reduction or things have really improved. Unfortunately, a lot of the institutes, we are seeing increase in the write-off numbers. So if you see overall comparisons, we are seeing that there is a delinquency reduction. Having said that, like I was mentioning, the write-off numbers have gone up. Write-off numbers in the bureau, which were at around 25,000 lakh crore, has gone up around 45,000 lakh crore. So, that's a huge increase in the numbers, and that has got witnessed, by most of the major institutes, including private sector banks and NBFC MFIs leading the bank. This is, an analysis which we wanted to show you. So what we have done is we have done a study, and if we look at the data, we have looked at the present situation. This is around June data and 6 months prior. Now, we looked at various buckets. So the green bar that you see, so I'll go to this first. So if we see this is around 98% is zero DPD, around 6 months back, around December. Now this data, if we look at the same thing today, which we fast forward to the present day, we are seeing that for one lender, this number has fallen to 96%. So customers who have lending with only one lender, their current bucket has dropped from 98 to 96%. The other delinquency buckets, which are 1 to 29, 30 to 59, 60 to 89, 90 to 179, over here if we see, it's 1%, 0.4%, 0.3% and 0.4% respectively. All this year we are seeing, this has gone up. Now I'll fast forward, I'll not go to the 2 lender, 3 lender, I'll not explain everything, but if we just go to the greater than or equal to 4 lender, the customers who were in the current bucket were 93% of the customers were current, and 3% were in the 1 to 29 DPD. This has even deteriorated further. The current bucket has gone down to 88%, and the 1 to 30 has gone to 5%. And across buckets, of course, we are seeing a movement wherein, the delinquency-wise, there has been an increase across buckets. So what this is showing is that it's showing a worsening situation today compared to where we were 6 months back, and that is not just for one lender category, that is across lender category. Of course, as the number of lenders are going up, the severity is going up much higher. So, this is something that ideally the MFI industry may want to take into account. I remember a while back, Sa-Dhan also had come up with these caveats wherein they were looking at 1 lender, 2 lender, 3 lender. But of course the norms have changed. Having said that, with the changed norms which are very welcome today, I think this norm also should be probably looked at least at the institution level, because the data is showing worsening of quality with the number of lenders going up. So 98% is the zero DPD. The 1% here is the 1 to 29 DPD. 0.4% is the 30 to 59 DPD. So that's the number of customers who are in each delinquency bucket. So 6 months back, around 98% of the customers with one lender were current. So they did not have any delinquency. However, today that percentage has gone down to 96% for one lender today. Similar, yeah. Share of one lender in the bureau is almost around 70%. The last time I checked, I don't remember the exact number, but it was close to 70%. And all other lenders, the other 30% is spread across all the lenders. Unfortunately, the share of greater than equal to 4 lenders is higher compared to 2-3 lenders. So I think the share of greater than equal to 4 is around 10 to 12%. So that is why I think that is where the skewness is happening, and that is where the deterioration is also happening. So the customers in the bureau, there will be an addition of new customers, and there will be certain customers who close their loans and exit. So we have just looked at all the customers. No, because if we do that, then we have not done a sample study. We have looked at all the customers in December, all the customers in June, and their behavior with different lenders. So the 93% was zero DPD. So they were current customers, they were doing well. That has actually come down, which shows a deterioration. I don't have the state-by-state view, but we do have data, and like I was mentioning, certain states are showing way worse numbers compared to other states. And you're right, state-by-state should ideally be looked at, because state-wise also there is quite a bit of a difference, especially in the MFI segment. We are all aware that things change when we move from one state to the other state. But certain states have way worse data compared to others. For example, again, Punjab has really bad data compared to, say, Telangana is doing very well. Because Telangana, we are seeing a lot of new members, NTC customers. So Telangana data looks good. But I don't have that data right now to present today. This is the entire MFI industry. This is the microfinance industry, so this is not split bank, NBFC, right? Whoever is submitting data, all institutions. We do have data bifurcated as well, but frankly, bifurcated data doesn't show any starkly great results. The state-wise data shows more stark results. It's not that an NBFC is able to do splendidly well where a bank has not been able to do well, for example, in the state of Punjab. So we don't see a stark difference. There is a little bit of a difference state-wise, there is a mixture. I think the mixture is more than sector-wise, it's institution-wise, because some institutions are homegrown. So they know certain NBFC MFIs, for example, originated in certain states. So they know the flavor, they know those customers better. So we see that those are able to manage a little better. But the entire sector is not doing extremely well just because that one NBFC MFI or one bank is doing well. And unfortunately, we cannot give bank or NBFC individual data. Banks? No, this presentation is restricted to just JLG. The SHG data today doesn't get submitted. So we have a few PSUs submitting data partially to the bureau. I mean, there is no trend of data submission. Like, for example, there's a very good discipline in the microfinance industry where they submit data on a monthly basis. That trend is not there for SHG, and hence creating any views on a trended basis is not possible when we start looking at SHG.
Both the database, both the data on same page or different page? Because December end we will be having 7.5 crore and June maybe 8 crore.
That's correct. So this is on the entire microfinance industry. You are absolutely right that certain customers will exit because their loans have gone over. Certain customers will enter because they would have been given new loans. And we did not want to restrict the base or take a smaller sample. This is on the entire microfinance industry.
Entire means both the data are on base of that time frame. Means December data, December base there, 93% of 7.5 crore and 88% of 8 crore.
That's correct. So you're right. To that extent, you're right. We could hold the data and look at it, but this will not starkly change because most of the time the new customers which have got added would not have really flown into newer delinquency buckets. It would be the older customers where we see these kind of vintages. Sir, it's a little difficult to answer because Assam has been new once upon a time, was one of the best states, and it was doing very well, and then it slid a slippery slope. Similarly, West Bengal was number one state. What I would rather say is it's not state, but I think when the leverage increases to a customer, because West Bengal the same situation happened, and the leverage increased, and there was a lot of write-off that the industry had to do. Similarly was the case for Assam. Then I think they do go on a slippery slope. I wouldn't say that just because the state is growing well, there is an issue. But I think there is uncontrolled lending that starts happening when they see a green patch, and probably that could be a cause of concern. Because for example, the state of West Bengal or even Bihar, there are a lot of districts, and we are going to show that for West region as well, which are sort of aspirational districts or districts which have not received funding. So there are those patches even in areas which have seen this kind of a situation where lending did not. I mean, there are districts which deserve lending, and last time I was in Sa-Dhan conference, I saw them trying to help these kind of districts. Where I truly feel that just because we were in the Assam conference, just because Assam was in a bad situation doesn't mean that all the districts were bad. I mean, there were districts which deserved lending, which also should be there.
When you are mentioning more than equal to 4 lenders must means one GLG group being financed by more than 4 banks, 5 banks like that.
So it could be it could be sectorally anything, it could be a bank, NBFC and...
Oh, whatever, lender means lender. Yes. So one GLG group financed by more than 4. No, she is talking about one individual.
No, it's not a group. So we are looking at it on an individual level. We don't look at a group level.
Individual
So
customer.
Shruti may be a part of the group, but I am looking at Shruti. I will not look at my group of say 10 women or something.
Okay. Okay. So if you see the analysis, one lender means that there is a deep down of 2%, right? 98 to 96. Then two lender 96 to 94. Then three lender 95. So 2%, 3%. Here there is a deep of 5%. That you want to highlight.
Yes,
Right?
we are trying to highlight that as the number of lenders are going up, we are seeing a higher deterioration, and across the time period also, the 6-month time period, the deterioration is much more. Yes.
So, as rightly asked by some of the people, that if you can say that the growth pattern also to a particular customer being funded by more than 4 lenders, maybe the growth is 25, 30%, 40% kind of a thing, then the delinquency can be compensated. That vis-a-vis the growth, the delinquency is not that much which is being sold over here. That's my point.
Yeah, that makes a separate analysis, but that's a good point. We will have a look at that as well. What we also were trying to do is, there was a point about how customers are graduating or moving from the retail, MFI bureau, and what are the kind of
I have a
loans they
question.
take on the.
A question on the previous slide.
This slide?
The previous slide. How is the increase in disbursal? I mean, in which segment you find that the highest disbursals are happening? Customer with 1 lender, 2 lender, 3 lender, or 4 lender in last 6 months?
So 1 lender disbursement is the lowest, and that is what the NTC levels have come down compared to last year. So what is happening is a lot of funding is happening to the existing to credit customers. So say you are a new to credit customer, you've never got a loan, and I'm an existing customer, I've got a loan. It will be more difficult for you to get a loan than me to get a loan. I will get funding faster. So we are seeing that more increase is happening in 2 lender plus category, not in the 1 lender plus category.
So between 2, 3 and 4, where it is exactly?
So 2 and 3, because I think there are the SROs who are also trying to tell the institutes that greater than or equal to 4 lender is an area not to tread into, because it becomes difficult for delinquency management. So 2 and 3 lenders is where the maximum increase is coming. Amongst 2 and 3, if you ask me, 2 lenders is where the maximum increase is coming.
Thanks.
So this particular area is where we are trying to look at graduation of microfinance customers to retail customers. But before we get there, we also wanted to highlight that what was the overlap. So how many of these microfinance customers have a footprint in retail bureau? And when we say a footprint, they could have any loan in the retail bureau, say a small business loan, a personal loan, a home loan, any small thing. Even if they have a 2-wheeler loan or a credit card loan, we are counting them. So in 2019, when we had done this analysis, around 22% of the microfinance customers had a footprint in the retail bureau. As soon as COVID hit, that number went down to 9%. So we saw a very low percentage having this microfinance footprint to retail. In 2 years, those numbers have gone back to what they originally were, to around 25%. They've actually increased a little bit. And if we look today, 2024, it's a phenomenal 38%. So we are seeing that 38% of the customers in the microfinance bureau also have some or the other loan in the retail bureau. Now what we have also done is we have looked at what are the top loans that they are taking in the retail bureau. So if we see business loan is the maximum, the first loan probably, or maximum maximum loan that they are taking is a business loan. Second comes the consumer durable loans. Probably they are purchasing a TV or a phone or small electronic device, so hence the consumer durable loan comes in next. Third loan is the gold loan. Fourth is the personal loan, and fifth is the 2-wheeler loan. Now, again, we have divided the area geographically into semi-urban, urban, rural when we look at our data. And surprisingly, when we look at the data, business loan and consumer loan are the top loans when we look at semi-urban category. But when we start looking at rural category, it's usually the gold loan or the 2-wheeler loan which come as a top product. So the point I'm trying to make is that while I put these 5 or 6 categories of loan as the top loans, they do change geographically. So semi-urban loans are pretty different from rural loans. So that is the point I want to make. Yeah.
Microfinance customer will be having voter ID as their primary ID, and maybe other loans you have उसमें PAN card वगैरह रहेगा. So are you able to join that? Or there is a scope that 62% that we are saying that not intersecting can have there also there is a part which can be part of microfinance as well as retail loan.
So the Bureau does have a very strong search and match engine. To your point, we will not use just one, the voter ID, for example, my voter ID along with my phone number, my full name, my address, all that gets used for doing a search and match. So we call it a search and match logic. So if one thing is not matching, but say other 2 or 3 things are matching, then it comes as a match. To your point, what is the percentage that probably the low match percent? We believe that we are able to clearly match up to 95 to 98% depending on the different area. There is 2 to 5% ambiguity because say I've given my name as a little different. Say I've given my middle name in say Microfinance Bureau, but I've given my first name, last name in the Retail Bureau, or say my phone number is different. Then Shruti will not get matched with that Shruti. So there is going to be a little bit of an ambiguity when Bureau data is concerned. Of course, the ambiguity lessens as soon as we have variables like, instead of name and address, if we have, say a proper phone number, if we have a PAN card data, if we have a voter ID data, as soon as it's more numeric, that ambiguity goes down. But there is a scope that there will be a little bit of a miss because of the way data is submitted by, one institute versus other institute. With this having said, we wanted to look at some of the positives also we wanted to highlight as to what's happening in the microfinance industry today. So when we look at some of the top districts in terms of disbursement, on the left hand side you are seeing the disbursement, the industry disbursement. We are seeing West Bengal, Murshidabad is the topmost district today. The overall outstanding of Murshidabad is almost 4,000 odd crores. Next comes in Samastipur in Bihar, Muzaffarpur in Bihar, East Champaran in Bihar, and Madhubani in Bihar. So overall, apart from West Bengal, which has a top district, it's pretty much Bihar, which is claiming the top spots in terms of district. Now, if we compare this to the overall west zone, we are seeing Nanded, Nagpur, Doha, Yavatmal, and Solapur are the top districts. If we look just in terms of disbursement amount, this disbursement is vastly different. It's half of that. Half of what is got disbursed in the top 5 districts in the industry. So the West Zone disbursement is quite low compared to the overall industry disbursement. In fact, in some of the places like West Bengal, Murshidabad, which has seen a growth of 31%, the top district, which is Nanded, has seen a growth of only 19%. So those statistics are also vastly different when we look at overall disbursement district-wise. Solapur is showing good growth, but so we have looked at it, we have put a disbursement amount also. Suppose if Murshidabad is disbursing 4,000 crores, so that's number 1. Whereas Samastipur is disbursing outside business. So it's sorted outside business, not growth. So if we look at the overall, so there was one of the points that we were discussing with the Sa-Dhan team where they were saying if we want to do an outreach in the West Zone, which are the districts which are doing pretty well. So we have found that in the last 1 year there are certain districts which have really picked up pace in the West Zone. These are the districts of Dang, Bheen, Alirajpur, Kachach and Siddhi. And most of these districts have picked up disbursement and their outstanding has increased in the last 1 year. If we see Dang, for example, this has seen a disbursement increase of almost 147%, Bheen almost around 102%. So more than 100% disbursement has happened in these districts. And these were districts which were traditionally not being funded or looked at by a lot of large players. Now, since we have data at a pin code level as well, we have analyzed this data even at a pin code level to see what pin codes are doing well. So certain pin codes are done, we are seeing, for example, the 394710 pin code has seen an 835% growth, whereas 730 pin code has seen an 89% growth. And year-on-year disbursement is also looking phenomenal. So there are, again, there are pin codes which are doing exceptionally well. And we are seeing that if certain outreach programs are made to these regions, there is a good chance of growth. And a lot of NTC customers are also coming in from these regions. So this is a place probably or an opportunity for a lot of institutions to look at because we are seeing very healthy growth due to credit customers being pulled in on the bureau data, and delinquencies are not on the rise, of course, because they are newly sourced customers. So the quality of customers also being good. is the point we wanted to make, especially on the outreach part. Again, if you look at the data in terms of overall portfolio-wise, also we see that West Bengal and Bihar are the top states, and their districts have the maximum growth. However, when we look at the West zone, we are seeing a huge change in terms of top districts portfolio-wise. The districts of Nagpur, Nanded, Doha, Solapur, and Pune are the top districts. In this, Nanded as well as Doha have lower delinquencies at 4.37 and 4.56%. Now compare this to Bihar, Samastipur, which is at 2.93%, or even Bihar, Muzaffarpur, which is at around 3.67%. So, there are certain districts which are the top districts not doing so well. Having said that, we have seen a phenomenal growth even for these districts in the West zone, which may be something to look out for, because we are seeing certain early warning stress in these districts. We already discussed the one lender, two lender, three lender. So if you look at some of the top states, we are seeing that between the one and two lender, almost for Bihar, around 76% of the data gets covered, and 24% is greater than three lender. So some of the best states are Karnataka, where maximum one lender exposure is there, and this goes to the gentleman asking if this data is available one lender, two lender wise. Tamil Nadu, which is, so Bihar is a top state in microfinance today. Tamil Nadu, which is the number 2 state, has one lender which is at a lower percentage at 60%, two lenders at 14%, and three lenders at 26%. West Bengal, of course, so apart from Uttar Pradesh, which has the lowest one lender at 51% and highest three lender at 36%, most of the other states stand at around 60% plus. Similarly, if we were to look at the West zone and do an analysis of one lender, two lender, three lender, because we are also, one of our eye in this conference is also the West zone, we are seeing that Madhya Pradesh has the highest one lender, which is only 58%. Now the reason why we showed the stats, national, the top 5 states, is sort of to put it on in comparison to where we are nationally. So nationally, the West zone has lower one lender and higher three lenders compared to the overall industry. So this is something that the lenders may want to be watchful of, especially given the deterioration in delinquency that we saw in the previous slides. If we do an age analysis and we look at overall which are the age or the age that women are being lent to, maximum lending is happening to women who are 26 and above. Of course, we are seeing the highest roughly 31 to 40, where a lot of lending is happening. Greater than 50 also surprisingly high at 11.89%. This is not something we see on the retail bureau. When we look at the retail bureau, as the age goes up, frankly, the lending goes down. So this is a very healthy lending pattern, especially in the microfinance industry. It's well spread across for the industry. Similar analysis we have also done for the West zone. So West zone also has a healthy pattern. However, we are seeing that greater than 50 is much higher here. It's 15% compared to the previous one, which I will bring up, is around 11%. As the age goes up, the West zone lending is actually going up. So that is a pattern that we are observing in the West zone, which is a little contrary to the industry. Having said that, what we are seeing is as the age usually goes up, the lending culture or the culture to give back the money or the delinquencies usually go down. So a lot of the delinquencies which we see on the retail side is loans like personal loans, business loans, is at in the lower age group. So this kind of a mix is actually a preferred mix, and I personally believe, looking at the retail, that is a more healthy mix in the microfinance industry. So that is the number of women who are getting loans. The share.
So I think delinquency.
So that is the age-wise delinquency. It's around
3.27. Somebody is above 50.
their delinquency is around 15.2%. 90 plus. If you look at the saturation, so here when we are looking at saturation, we are looking at census data, and we are looking at how much is penetrated for every household. Of course, the census data available with the bureau is the 2011 census. So, we have done some calibrations on that census and, sort of taken it forward to 24, but there are a lot of assumptions in this data, so I just want to make that caveat here. So overall saturation-wise, we are seeing that Madhya Pradesh has the highest saturation for the microfinance industry, still lower than 30%. Maharashtra is at around 21%, Gujarat 18%, and Goa at around 11%. So saturation-wise, if we see, there are a lot of households which can still get good lending in the microfinance industry. If we especially compare this to the census population. And for the purposes of the study, what we did is we considered one woman to be in one household, because usually we say that there will be one woman per household. Of course, there can be more than one woman who have taken a loan, but to make the study easier, those were the assumptions made. But still with that, we are seeing that there is quite a good scope for this industry to grow. If we look at the saturations in the west zone, we are seeing that Nanded has a saturation of almost 47%, Yavatmal of around 37%, Indore is again 37%, Jabalpur is around 38%. However, the districts of Pune where we are today, Nashik etc. has lower saturation. So there is a scope of increasing the lending, especially in these districts. And Nagpur also there is a saturation of around 29%.
Population है उसको कैसे correlation क्या है saturation against what?
So we have the census data and we have the household data. So we have how many borrowers are there in the microfinance industry. We have that data, and we have the total number of households as per the census available, which is a government source. So we have looked at how many borrowers are there in each of these districts, each of this pin code, and we have come to what is the saturation level. So basically, it's a division. So that's it from my end. If there are any questions, we'll be happy to take them.
Excuse me, sir.
So this is for our microfinance segment. It is not the presentation for HR. So next time we will try to put one slide or two.
That's one of the concern area.
Yes, very much. Just wait for a while. We will present you a study. What we have conducted. And Mr. Mamin was sharing some of our pain points, so you will get that data and everything. We have done wonderful study. And we didn't do anything actually, there was a set of people who guided this study. So thank you, Shruti. I'm extremely sorry because till last time I have pushed them, give me this data, give me that data, then they were running around. Thank you very much for that. Yeah, so a round of applause for this one, Shruti, please. So if you can come here and a moment. A token of appreciation for you. So our next panel is the panel discussion 1, which is around microfinance model and products, new initiatives and challenges. What I was requesting to you people that today, let us also discuss about how to take it forward. We have talked about enough challenges, problems, everything, but how can we make that one? How can we take microfinance on the next leg? So let us also discuss around it. So I would like to invite a moderator, Mr. S.S. Bhatt, CEO FWWB. Mr. Bhatt. Then Mr. Satish Rao, Executive Director, Hindustan Microfinance Private Limited. Satish. Mahip Power, Mr. Mahip Power, CEO, Navsamruddhi Finance Private Limited. Mahip. Then Mr. Anirudh Nirikar, Director, Sampada and Entrepreneurship and Livelihood Foundation. Mr. Mahip Nirikar. So, Mr. Rajesh Deshmukh is not here. Mahtab?
So,
Siddharth
From Bank of Maharashtra.
is from Bank of Maharashtra. Please, Megha Samant, CMD Annapurna Mahila Cooperative. What's the board?
Good afternoon, everyone. Thank you, Saibal and EG for providing this opportunity. I think it's a good thing that these journal consultations are held and Equifax is giving the presentation so that everyone understands what is happening in the different regions. I'm really happy and glad that because NIBM is one location where I have been regularly coming, and it's like homecoming for me here in NIBM, and Dr. Naveen and other faculty here really have a lot of affection for this. Second thing is Sa-Dhan has organized this. Sa-Dhan's creation relates to FWW. In fact, it's way back when the Sa-Dhan was created. No? Ilaben Bhatt and Vijayalakshmi Das, they had invited Dr. Bimal Jalan, Government of Reserve Bank of India, and all the CFDs of banks were there. At that point of time, there was a request that there should be a regulatory organization for community organizations and the microfinance organizations. In that way, Sa-Dhan, the idea generated in Ahmedabad in that meeting, and now that it has grown so much, it's a great thing to happen to the microfinance world. It's good that we have very learned and professional panelists here, and representing, I think I should thank Sa-Dhan also, because different entities are here represented in the panel. Like RBI CGM was telling earlier that in order to bring the harmonization among all the entities, I think all the entities are represented here, different entities, either banks or cooperatives or community organizations, NBFC, MFIs, that will give a lot of insight as to how they are doing the work and how it is coming up well. One thing about the microfinance initiation when it was started, I think it was started by the community organizations for the financial inclusion of women and inclusive growth, and also to see that these women become self-confident and also they are financially independent. I think that was the basic idea of starting the microfinance movement. Ilaben and Vijidas, who are the pioneers of this microfinance, they were no more in this world now, but when they were leaving, they were having little pain, as RBI CGM was mentioning and even GG was also mentioning, no? That we are not exactly following that. We are little diverting from the field and more of commercialization or more of profiteering or these type of things are happening. How we should bring that, I think Dr. Megha Samant would be able to explain on that more in the discussion. Now, how we have structured this presentation, anyway, Saibal informed that this is on the microfinance models and also the products, what are the challenges and innovations. I think a lot of food for thought has been given by RBI CGM. He has, based on the RBI study, what are those good points that microfinance industries are doing, and also what are the concerns, because RBI, when they did revise the guidelines in the year 2022, at that point of time, both microfinance industry was also happy that there has been a flexibility for them to operate and come with different products and other things. And also RBI was happy that yes, we have been able to bring harmonization among all the entities, which was a complaint from the industry, microfinance industry. But now after 2 years, when we see that, whether the objectives of the guidelines have been fully achieved. I think as RBI CGM himself put it, it is not fully achieved. In that way, how that we are doing in this panel, I think, because those type of concerns have been expressed on the over-indebtedness or even the recovery practices or even social impact for that matter, whether we are having that social impact. In that way, we would like to see that. I think we have time up to 1:45, Saibal? 1:45. We'd like to finish within. What I would like to do is, say each member, because they represent different entities and they have their own experience, while presenting that, they would be definitely mentioning about their organizations and other things. In that way, for the panelists, though I have initially told them, one is each panelist will have some 7 to 8 minutes in the first round, which they will cover on about the organization, model of microfinance they are following, and also unique features of the organization, because it is for the other participants or other organizations to learn about your best practices and how it is happening, and also the product suite, because now even Shashi was also mentioning in the morning that products, innovative products are not coming, but there are entities here who have brought out products like NABARD CGM was mentioning, there should be livelihood. Sampada has done that in the livelihood space. That sort of experience also would help to bring certain innovations. And their journey over the years, how the microfinance industry has transformed or their organizations have transformed themselves into a sustainable organization or impactful organization, that is one thing. And now we see that the climate change is one of the most affecting factor for even the microfinance industry. Across the globe it is doing, but microfinance industry is also getting affected out of that. How is that they are following these ESG practices and climate resilient practices to build climate resilience among their clients? That is the thing. And the challenges, because now our regulator is also here. What are those regulatory challenges you face and what are those suggestions you would like to give on that matter also could be covered in your presentation. That is the first round. And second round will go about the innovations and the best practices. In that way, now as I told, there are different entities represented here. And in the morning session, we have seen that what is the size of the industry. Suppose if you take SIG also into consideration, it is about 7 lakh crores is the industry figure of the outstanding. Then about, say, about 7.58 or even 8 crore customers in microfinance and about 1.4 crore groups in SIGs, about roughly about 10 crores if you take also. Then the penetration, even with these, as Saibal was mentioning, the penetration, though we are present in 723 districts, the penetration level is only 33%. There is a gap of over 60% for penetration, whether we are looking at that. And the other thing what we are seeing in this microfinance industry happening is only the practices. What are those practices, best practices people are taking, and whether any improvement has been there in those practices, that also needs to be done. In that way, I think microfinance industry has started with women. We have one of the legends of the microfinance industry, Dr. Veda Sawant, who has been in this, she is running cooperative and which is also doing the microfinance. And as a lead for this industry, in the cooperative sector also, unlike others, they have the advantage of taking savings from the members. How it is benefiting them in doing this, I request Dr. Veda Sawant to start with.
Hello, good afternoon everyone. Thank you Bhatt sir for introducing me with those kind words. And Gigi sir, Saibal, I see all my Sa-Dhan team here and I feel very happy and at home. And on the other hand, I see Dr. Naveen Kumar and NIBM, I always feel as a home. Let me just spend two more lines here. saying about my relationship with NIBM. I have been coming here since 2000 and they used to hold trainings for bankers, and microfinance used to be one of the very hot and interesting topic for which they used to invite me, Dr. Dilkar Rao, Dr. Conclave, Dr. Dasgupta. I have had so many friends here who had become like family friends. I really miss them, but Naveen has now taken it up, so I keep in touch. But of course now there are no more sessions on microfinance. Seems like everyone knows all about it, so no more trainings required. As Bhatt Sahab has rightly put it, this industry, microfinance, became an industry which I realized when I was in the middle of it. When I left my Bank of India job in 1993 after serving the bank for 12 years, I thought of financing the poor women, and I started just from myself, as if you see a problem, you be the solution. So I started financing poor vegetable vendors from my own pocket, and it's now 31 years since then. And within 10-15 years, I discovered that I am standing in the middle of an industry, and I thought I was doing a social service. So I was, I had a big shock, but then I survived because I had people to support, I had members to support, and I already had a team to support. So today, I feel scared to say, but I'm 65, and my team is supporting me now. They know that what we have gone through and what we have been through. I really fondly remember and miss Viji and Ilaben here, and I thought I would meet Jayashri Ben, but I don't know Sudhakar and Jayashri Ben. These are the women with whom I have done all this journey, and today women are missing from the microfinance industry, and I am one of probably the last few ones who are leading MFI scheme. I'll be stepping down next year. I have nominated my CEO, CO who are not my blood relation, and they will be taking the, the mashal, the lamp ahead, the torch ahead. I have to spend 5 minutes saying about the innovations in the industry. So the first thing that we chose, and I am still proud of that, we chose a cooperative model. I seriously love the Cooperative Act. There are so many lacunae there, it has to be updated, but still it has so many things which you don't even get in a small finance bank. Small finance bank, now we have about 11 or 12 as of now, and I have discussed so many times with Viji and Ranjani and people like that, my friends, that why we should do small finance bank. But I don't miss it. I don't think we have a multi-state cooperative, 95% women borrowers. We are a 200 crore size, middle size MFI, and we have a credit plus approach. I am going to say a few lines about each of them. And I am very openly and happily saying that we are not a 20,000 crore MFI, but we are touching lives, we are changing families, we are changing their quality of life. So I could do all that through a cooperative model, and if I would have become a small finance bank, it's now easy, it's very easy. I could have applied, I have given it a thought so many times. But I think then I will be pushed to do big business, we will be pushed to do secured financing, and today I am saying 100% of our 200 crores portfolio is unsecured. And still we boast of recovery 100%. Post-COVID and post-demonetization. It was a big write-off, as we all from the industry know. We are all worried about the collection. And because of the cooperative model and peer pressure and peer support, which were the tools from day one, I have been using those tools from last 31 years, more than that. And there are women, actually this industry was started by women, by small groups, Bachat Gat and all that. So always it was like the peer pressure and peer support were the tools which even today we are using, and we could recover all 100%. There was a 10 crores write-off, but that was half from the members' savings and half of it was from our reserves, backdated reserves. So we are still back on our feet. We have booked a good profit of 7 crores this year, and unlike many NBFC MFIs who had to now start implementing BC model, business correspondence to some banks, we have our own portfolio. We are back to normal. So these are all innovative things which were from day one. This is not a new innovation. This was from day one, which I want to still mention here, and I would like everyone to restore their trust and their trust on the cooperative model. And I think we are happy and fine with this. Second innovation is, I would like to about the financing thing. We always have had, we are urban microfinance specialists. So unlike the rural MFIs, we talk less about the climate change and the environment. But in all our, financial literacy, client education, we have a credit plus approach, I must say, about our insurance model, which is very pioneering one. But about the loan products, I must say that we always have had 75% business loans and rest of them for education, health. But we have a health insurance in-house since last 21 years running profitable. The IRDA has taken cognizance of it, and we have a SAMI committee report, standalone committee on micro insurance, and Annapurna and Seva. Two models are mentioned very in a very nice way in that SAMI committee report. So I'll talk about that in a few minutes. But we have always had this business loan as the leading loan, but health, education, and other old debt repayment and asset creation. These are the 3-4 products. But we have started recently home loan in slums. We have been financing home loans, and we are propagating that in the slums, the women should form small cooperatives and they should build their houses. 5 women group, the joint liability group, they can build, all 5 of them can borrow home loan and they can build homes. And we are still, struggling with this product. This home loan product is not yet settled. We have introduced it last year, just after the COVID. We are struggling, but I know where we have to do the improvements and fine-tuning. So very soon we will be settling down with this home loan product. And I reiterate that cooperatives in slums, that's my a very fond idea that I am toying with today. And since last 2-3 years I have been toying with that idea. So that's about it. We also use a lot of technology. It's a very women-owned, women-led organization, but technology, we delivery to the last mile, we are doing it through TAB, and very soon we will have an app which will direct the clients can log on the app for their insurance claims and all that. That will be next year. So we are continuously working on the technology part of it. Now mentioning about my credit plus approach, we have developed daycare centers in slums, and it's not much, it's not big, but 10 to 20 women, they have started, they borrowed from Annapurna, they have constructed their house and they have started daycare centers in their homes, and they are running for last more than 10 years successfully. So, and we give a lot of inputs to the children. So I think this is a business product. This is a business, social business. Everything that we do is a social business. I am invited all over the world as a social entrepreneur more than my microfinance hat. So now 2-3 minutes for insurance product. We developed the micro insurance when IRDA had not even started talking about that. That was in 2000. Because in 1993 I started microfinancing, and within 10 years I understood that women are dying without any big disease, or somebody dies of jaundice even today, or malaria. So you just can't buy it like that. So we approached, being a banker, I approached many insurance companies and tried to discover, but IRDA was not even talking about insurance, micro insurance. So in 2003, luckily enough, I met a French actuary who is still on our board. He is our big advisor, Mr. Francois Xavier. Some of you might have heard his name. So we developed the first health mutual fund. It's a cooperative model. We call it a mutual fund. It's a French terminology, but it's a cooperative model. It's a not-for-profit company. We have 6 organizations within the Annapurna Parivar. First one is the Multi-State Cooperative Credit Society, second one is the not-for-profit company, which is by women, for women, like that. And we have the insurance model, which is based on mutual cooperation, and they all contribute, and everybody's family members are also covered for any disease. Recently we have started hospitalization, compensating, we have been refunding their hospital expenses since last 21 years. The company is making profit. We don't require any grants. It's only not registered as an insurance company because of the solvency capital. And it was 100 crores solvency capital requirement, which throughout the SAMI committee discussions and deliberations, we have negotiated, and they have come down to 20 crores. So we have been still, we meaning Mirai Ben Chatterjee is there, myself, and there are others. Nachiket Moore was there on the committee, and we have been negotiating that they should make it 5 crores for Annapurna Insurance and Bimo Seva, because we have proven the model, we have been working since more than 20 years. So if they allow us for entry for 5 crores solvency, we will register ourselves as an insurance company. So we are on that verge. So it may happen tomorrow, or it may happen in another year or so. But it will happen, And we are doing all the advocacy for that. So our insurance model is tested, tried. Women have been receiving help since last 21 years for health, life, family. Now wage loss compensation we have introduced recently, and we have also started covering the death of the guarantor of the borrower, all from our in-house insurance. Once upon a time, CRISIL has rated me badly for doing microfinance and micro-insurance under one roof. Now every single financial entity is doing that. And I fought with CRISIL then. Then I created 2-3 different structures, but we are still doing it in-house. And we are doing it under one roof, and we don't regret. So, just last line about the climate change and global warming. Because of that, again, let me repeat, we are urban specialists. We have a head office owned by us, 30,000 square feet, 12-floor tower owned by Annapurna Credit Society. I boast of that. And without anybody's grant or anybody's support. It's on our own property. I'm really proud. All women have done it. So, and we have another equally big office in Mumbai. And we are working in the urban slums. We have seen such a big landslides, asset loss, hillock falling on the slums, and we have started our asset loss product 5 years ago, and we are every year enhancing. In last July and August, we have given about 50 claims in Pune and Mumbai, and we are compensating all of the asset loss. So all this is required, my friends, and microfinance has a lot of scope to do all innovation, but we have to know our basics, right? And we know our basics. It's a mutual cooperation, peer support, peer pressure, and it's always credit based. It's never ends at credit. It starts with credit, but it's credit based. Thank you.
Thank you, Dr. I think one of the role model for the microfinance industry and women leaders. What she was mentioning as women are missing. At the client level, women are there, but at the management level, at the leadership level, women are not there. I think FWWB and Sa-Dhan will definitely work on that idea to how to bring more women in the microfinance. And the other important point what she touched, and it is for the for-profit or the NBFC MFI, is touching lives and the livelihoods of the people. Whether how we are ensuring it's only loaning or something else we are seeing. Then the credit plus approach and the other accessory services what she has highlighted on the insurance. How an insurance, micro insurance plays a lot of role in the role of running a poor family. I think that is. Now moving on to graduation from cooperative to livelihood, I would like to come to Ms. Merika, Director Sampada Entrepreneurship and Livelihood Foundation. The same questions. I think from your organization side, what are those things you are taking, what are those innovations that are coming out?
Good afternoon. Thank you very much. Let me start with incorporation of Sampada Entrepreneurship Livelihood Foundation. It is a Section 8 company which previously had a portfolio with Sampada Trust from year 2002. And from that day, actually, if we really talk about microfinance, when I remember in 2005 National Conference, there were 124 members, and all these members talking about development finance as well as finance to the bottom of the pyramid, Mr. Mahajan and Vikram Ankura and all those. Actually, those days I remember that we had a product for addressing the real need of the rural poor, which was contributing to the working capital for agriculture sector. We had a product which those days was for the period of 6 months, where after the first crop of 3 months, like moong, we are into Maharashtra, and the green gram crop was there. So after 3 months, he has to pay only interest and then the remaining interest as well as the principal in the 6 months. So such type of products those days were developed. Secondly, in the year 2010-11, when NABARD came up with UP NRM, so that time when NABARD approved our loan proposal, those days we gave proposal for financing for vermicomposting, financing for pheromone traps, financing for livestock with insurance. Means all these things which were actually or which we are speaking today in the climate smart perspective. So in those days when NABARD gave us the UPNRM, so that type of things came up right from those days. We are a very small MFI. We are below 20 crore. But from those days we are looking at two aspects. One, the actual need of the borrowers or the actual need of the rural community where we are serving. Secondly, we are making a difference. Recently when we had the grading for our MFI, that grading agency also said that this growth is very meager one. So it's okay. That is meager, that's definitely. And I just mentioned one thing. It was actually type of a joke or something. And I think that microfinance, when we look at microfinance, small is beautiful. And the growth which we are making, I think that is the growth which we are expecting. And it is not for somebody else to see that we have started with 10 crores, gone to 100, to thousands. And we are managing entirely all these things. In Demon as well as in COVID, we were the organization where we had direct access or direct relationship with the borrowers, right from the farmers to their women in the family or to the children. But we didn't have to write off anything during both these stressful conditions where many of the MFIs did the big write-offs. Thirdly, with regards to RBI, which made this special reference on the interest rates. Sir, I would like to make this thing, that for small MFIs, it is very difficult to get loans from the banks. And what rates you are mentioning, presently what loans I am taking, that are 16 plus. 16 plus. And all these loans coming from the NBFCs, I don't want to make any type of what we can say allegation or something type of thing. But the concern which you have raised is really there, that we also want to lend to the poor people at a lower interest rate. But ultimately these operations has to be viable. And if we really consider my operation cost ranging from 10 to 11 to 12%, so I will have to add that much, and it has to go to 26, where I am spending 27, there also I am charging them 26, only because I am having certain amount which I can subsidize. So that is the thing. But I am very fortunate for a loan given for green financing which started 1.5 years before. FWWB financed us at the interest rate of only 9%, and there we are giving at 19%. So such type of things have come up. So I am quite sure that entire microfinance sector can do all these things. All these big MFIs, can do all these things, no doubt about them, because they are having a big type of portfolio and they can manage all these things. But for MFIs which are small, which has to manage in their resources. Secondly, huge challenges for lenders to come in. So these are certain problems which we are facing. The innovation parts I have specifically mentioned that we worked in the livestock area where everybody said that giving loan, taking loan, that is the only area. But giving a livestock without any insurance, livestock insurance, is the real way to lose that money if anything happens. In last season only, I can specifically give an example. When there was huge rainfall in one of their areas and we had given a livestock and the cattle was drowned in that particular flood, the insurance company immediately paid that amount to them. See, we would have done one thing, that the amount would have come to the, what we can say, the MFI or to the lender. But what we said, that give this amount to the borrower again, so that that borrower can purchase this cow again and get into that livelihood ecosystem once again, to keep the cycle of its income constructive, or that type of cycle should not disturb due to this. And such type of things we have done during these 2-3 years, and we are quite sure that if we really follow all these things, and if we really means finance on the basis of the real needs and aspirations of the people, this portfolio will never have a problem. Only my submission to the big MFIs, that if these people are not repaying the loans of small MFIs, borrower should be really stopped by the bigger MFIs. Even I will specifically mention Bandhan Bank. They say that Bandhan Bank has nothing. He has not repaid my 20,000, but he gets 1.5 lakh from Bandhan Bank. Then I am quite sure that MFI has to come in problems one day or the other. And we all will sit again together and we will discuss what are the real challenges. I really, sir, request you, sir, that if certain circular in these regards is really taken for all of them, I don't say that it should not be applicable to small MFI or the MFIs who are Section 8 or cooperatives. That has to go entirely across the sector. And GG sir can do it very well, sir. That if such type of things are done, I am quite sure that the portfolio which we are looking at, 4.25 lakh crores, will definitely go to say 20-25 lakh crores, which you all are looking at. And that is not a big thing at all. Only thing is that we will have to follow these disciplines so that borrowers don't think that these MFIs are meant for us. Actually, the borrowers are meant for the MFI. That is the real thing. But at present, the situation is that they are thinking that, okay, Miracle is going, let him go. Mr. Rao will come and he will definitely help you. So this should be taken care, and this will definitely help the sector as well. Thank you very much.
Yeah, thank you, Venkata. I think you highlighted the importance of responsible lending practices, which Sa-Dhan is also advocating and even Reserve Bank of India is also advocating. But it's up to the partners or the players in the market to see that. If you are having a short-term interest, then you will go with that. If you have a long-term interest on the impact perspective, then you will not adopt such perspective. Maybe because of certain pressure, because at the branch manager level there would be a lot of pressure, the local branch managers would tend to do that. But that practice of having responsible lending practices is very important. In that way gets brought. The second point, what was important, what you mentioned, is the connect with the customers. They have not been able to lose any money, or they have not lost any money during even the toughest period, because they had the connect with the customers. I think that connect is missing now in the regular MFI working, what we are doing now. In terms of even financial education, financial literacy, or the advisory services, that should be developed to see that these people coming and try to develop the ecosystem. It is not only lending, borrowing, the lending relationship. Beyond that, what is that relationship? We try to see that how the livelihood improves or how the income improves. That is the most important thing, I think you were highlighting. Thank you, America. Now, the thing is graduation again to the NBFC MFI, Satish Rao, Executive Director from Hindustan Microfinance. Hindustan Microfinance based in Mumbai. Now have been doing a lot of good job across the state and also even the outside states. And it is NBFC MFI. Earlier entities were one is cooperative, other one is the Section 8 company. Now more of a regulated entity we are coming to. I would like to hear from Mr. Satish Rao. You can just take about 8 minutes so that we are conscious of the time. Thank you.
Sure. Hello? Hello? You can hear me? Good afternoon. Thank you, sir, for the beautiful introduction. So brief about Hindustan Microfinance. We are an NBFC MFI based out in Bombay, headquartered in Bombay, and we operate in 7 states, which is Maharashtra, Karnataka, Madhya Pradesh, Rajasthan, Gujarat, and Telangana and Andhra Pradesh. We have a mix of products. We do microfinance loans, which is JLG primarily, and we do a bit of secured MSME portfolio also. So that's a new addition which we have done very recently. Our journey started in the year 2003, and I have my promoter director Anil also here. It was he who started this microfinance, and we started as a cooperative. So, as Mena Madam has in the cooperative sector, we also started as a cooperative credit society in 2003. We were the first to do it for the urban poor, because typically it was all the rural poor which were focused upon as a microfinance industry is. But we were the first to look at the urban poor. We slowly graduated, and we became a NBFC MFI in the year 2007-8. And from that time onwards, we have been doing a lot of product innovation. And the first innovation which we did, or which got being gotten, was in the year 2012, where we mandated all our customers to open accounts with banks. So in the morning you were hearing Sabu sir talking about the Jan-Dhan account starting in 2012, or sorry, 2014, August of 2014. But in 2012 itself, we were insisting, we were making customers, in those days it was the zero balance account, which we have in banks. So we made the customers open the account, and the funds were transferred directly to the customer's bank account. So all our transactions from 2012 onwards, disbursement was digital. Collection continued to be cash. Then came, okay, it's everything, all the changes comes from a crisis. So even this started because we had a big fraud which happened just in Pune itself, where one of my staff did a cash fraud, and then we decided, cash ka business band karna padega thoda, disbursement kaisa we will do it in the bank account. And then in 2016, we all went through the demonetization issues, and that's when we started we took the next step of doing digital collection. So we were the first to do e-natch collections. We had a very good strike rate initially, but over a period of time, we could see a lot of returns coming back and customer complaints rising because of bank charges and there were other issues. The group mechanism was failing. So the natch, or whatever we tried, we failed in that. But of course, we still continue to do more, we try to focus more on the natch collection method. Then we started also what George sir was talking about today, which is the individual loans. We did a bit of individual loans as a product variation, but we failed a bit. Okay, and that was more from an operations point of view, because the customers were spread all across, and making a collection from the door-to-door collection was very difficult. So we failed over there. But if you look at now, the recent product changes which one has been doing in the market, like in the initial years, the group size was 50. That got reduced to 7. And now it's come down to, I guess, even 3. 5, madam, there are still very few who are continuing with the 5 method. Most of them have moved into a 3 group. अब कुछ तो 2 का भी group बनता है, but I tell them 2 का couple होता है, group नहीं होता है. Okay, but still, so in a way, even everybody would agree over here, collections today has moved away from a group mechanism to an individual. So now, having said, I can sit and complain, I can sit and talk about market में मैंने ये कोशिश किया, this didn't happen, this failed, this happened. Okay, the last couple of years we focused ourselves saying that what is there in our control, okay? What is in our control is my people and my processes, okay, and my policies. This is what we look inside of it. And we started something called as, for our people, for our staff, we started something called as a Hindustan Leadership Academy, wherein we are focusing, we are creating good human, because frankly, to serve the women, to serve this poor, it is our staff who's connecting with them. See, we don't change them, like itna bhi process policy here. Till such time I don't change my person who's delivering that product and policy, okay, things will not achieve or what we are planning to do. So we started with the Hindustan Leadership Academy, we completed a year in that. We also, in that, it's a 5-year course, where every year we are adding up 25 people. So slowly we are creating something, and we want to give this to the microfinance sector. So slowly we will have members also from the other microfinance institutions coming for this program. So that is one thing which we did for our people. Then the second thing which we did, and again we had the benefit of having our own IT company. So we have our own IT company called as Gopas Technologies. Now through that we focused on technology. We bought in systems which everybody would have, like a loan origination system. Then we built in checks and balances, controls. So whatever process and policies we had, we tried to completely automate it. But that of course caters or helped us in reducing the turnaround time. But the other thing which is more about the customer behavior and things, that is all driven by our HLA, the Hindustan Leadership Academy. These are the things which we started off. Couple of CSR initiatives. In a way, we focused on women, widows. Primarily farmer suicide was high in Maharashtra, so we focused on the women and the widows. Primarily, and what we did was since we had connections in the cooperative sector, since we come from that, we still have that connection. We made customers, or we made our friends and circles to keep deposit at 0 rates in the cooperatives, and correspondingly through the cooperative we lent to the ladies 50,000 rupees to buy a buffalo or a cow so that she could earn money out of it. So it was a 0% rate of interest loan which were given. It's called as Saki loans. That's what we started off. So this was sort of the CSR programs which we did, and we have been doing it. Now on the process front, from technology, one point which I missed out, we started tracking. We have started using tracking mechanism, because actually में staff का tracking बहुत ही, as you grow, because when you're small, it's very easy to be connected to your customers, but the moment you grow up to a size, controlling our staff becomes a bigger issue. So we have various technology initiatives which are done in that. So with that, I leave it to, because we have a time constraint, so we will leave it to the second half, maybe to ask.
Yeah, thank you, Satish. Now, I think the important thing what he brought was the people, processes and products, where that focus has to be there. And the academy, what he was mentioning on the leadership academy, I think that is one of the good initiatives which is preparing people for the industry as to how to take these unique practices in the field, and also how to develop the leadership. The other thing is on the IT and the CSR, because you have to be relevant when you are working in an area. If you are not relevant to the community where you are working and understanding the requirement, you will not be there in the business. In that way, I think understanding that relevance of the community and developing their needs according to their needs is also one of the important things what we learn from Hindustan Microfinance. That's a good thing. The third thing is on the now MFI industry is looking at the group loans, maximum what we call is income generating IGL loans, and mostly it is about 90% is practiced. Now there is a graduation, even CDB is also supporting that how we can move. Even the Reserve Bank of India guidelines also provide you a window to diversify your portfolio into a enterprise loan category. The matured people or the matured livelihood clients who are going to the enterprise level how to build them, try to support them by giving higher loan amounts or giving them credit plus services. I think that is also one of the important services which has been brought out. While Dr. Medha Sawant was speaking, she was mentioning about housing. Now I would like to bring in Mr. Sanjeev Sharma, Head Alliance Partnership Art Housing Finance Limited, where because all these products are for microfinance clients, it is very much required. 20 years or 25 years back or 30 years back, suppose if we wanted to get a housing loan, it was, well, it's not there. Okay, I thought he has come. Okay. I think he is not there because that was one of the important components. Housing is one of the important components. Because when the banks, the Reserve Bank of India re-regulated housing for the banks and other things, that is how most of us are having the houses. Otherwise, we would not have dreamt of having houses. Now the microfinance customers also have that aspirations to own house, a good pakka house type of thing. In that way, I think the affordable housing companies which are coming up should definitely try to see that how we can collaborate. MFIs can collaborate with these housing finance companies, the affordable housing finance, to provide these housing services. Now, the player who has made very big dent in the market supporting the microfinance institutions, it is a NBFC, it's not NBFC MFI. The NABSA, a development offshoot of a developmental organization, NABARD. I request Mr. Mahim to take over and explain the initiatives what NABSA has taken in order to, one, improve the microfinance industry itself. They are a wholesale lenders. I think that one very special thing is that how they have been able to make great moments in the microfinance sector. Over to Mahim.
Thank you, sir. Good afternoon, everyone. I represent NABSA Finance Limited. It's one of the 3 NBFC subsidiaries of NABARD. The other 2 are, one is NABFINS, which is an NBFC MFI, and NABKisan, which focuses on the farm sector. The mandate given to us by NABARD is to focus on the non-farm sector, and we cater to a broad spectrum of clients. Like we are lending to NBFC MFIs. We are also lending to HFCs who are into affordable housing sector. Then there are certain NBFCs which are lending for vehicles, rural mobility. We are also promoting electric mobility also and green mobility. And there are quite a few NBFC players which are into it. In addition to that, we are also supporting the entities on a wide spectrum, like we are normally lending to investment grade rated entities, but we are also focusing on smaller entities which are unrated, which have not got ratings, especially MFIs, for our focus sectors. The company has identified a few focus segments. We are focusing on green and wellness finance, handicraft finance, and fabric value chain. Out of that, our green finance and wellness finance sector, one segment has emerged as our champion segment, which is WASH, that is water, sanitation and hygiene. For water, sanitation and hygiene activities, we have been lending to MFIs and smaller MFIs also. And so far, we have onboarded around 32 clients and lent around 360 crores in B2B mode. As Bhatt mentioned, we are a wholesale lender, so we are trying to promote that segment a lot. For that, like initially we started with a loan to FWWB because we got the inspiration from FWWB only. Like they were already lending to smaller MFI partners for water, sanitation and hygiene, toilet construction loans, etc. Over the period of last 2 years, we have been able to, we have been fortunate to have the pleasure of collaborating with great partners like Sa-Dhan. We are like closely collaborating with Sa-Dhan for promoting this segment and lending for this segment. We organize certain workshops like zonal level, like in Kolkata, then Delhi, and then in Bangalore, along with Sa-Dhan, for MFI partners to sensitize, and in those workshops we had also invited other partners. There are few partners to name water.org there, which is focusing on water activities only, promotion of water conservation. Then there are partners like Finnish Mondial, which are focusing on sanitation activities. There we have also tried to work on the demand side, and with support of NABARD, which is not only giving us concessional refinance for wash activities, which is which is at a rate which is lower than for other activities, which we are also passing on to our partners. So this way we are trying to promote this wash financing both from the supply side and from the demand side. During last year we have introduced one more product which is climate ready wash. Climate ready wash is essentially while working and with our partners we realize that climate and wash go hand in hand. Whenever there is a climate crisis, there is also a water crisis, and there are very many innovations in both sectors. There are specific types of toilets which can be very effective in flood-prone areas as well as drought-prone areas. They are called eco-sen toilets, where very less amount of water is required. So such toilets we are promoting, and we are sensitizing our partners also to lend for these activities. And there are also certain partners, there is one partner called Make Payan in Bihar. They are promoting a specific type of toilets which are called Shankar Balram type of toilets, which are essentially sealed toilets which are built on a raised platform, and the pits are also sealed. So in flood-prone areas, these prove to be very effective. So financing for such innovations we are promoting. So going forward, a company is looking for promoting especially green finance and upscaling its wash activities. For this, we are collaborating with other partners to blend the rates so that we can offer a lower blended cost to our partners, especially for smaller MFI partners which are having higher operational costs also. And in the process, also promote this climate ready wash product also. We are also exploring co-lending also. And by the way, I also just missed mentioning that our two major products through which we are lending is one is this term loan lending product. Then other one is the PTC route also. We are investing in pass-through certificates, and through pass-through certificates, we are investing in pools of MFI assets as well as other assets like vehicle and MSME.
Thank you, Mayur. I think NABSamruddhi as an organization has been trying to bring innovation in the microfinance sector. One from the product side also. Because if an MFI has to devise a new product, there should be a source of fund or capital for that. In that way, in popularizing this wash finance, and of late the climate ready wash, what you say that in the flood affected areas or drought areas, how the toilet should be efficiently managed. That sort of awareness is very important thing. As a ecosystem organization, ecosystem development organization, NABSamruddhi has been doing these type of innovation. The second thing what he mentioned was on the green finance. I think that is one of the areas which is very much required in this climate change. More of education is required for the MFIs and even other players in the market to understand what is green finance. The third thing is on the innovative financial instruments. I think capital is very important for MFIs to grow. Unless you bring some innovative financial instruments like what he was mentioning of pass-through certificates, which will build the capital, that your capital will be free for other activities. In that way, how it can be popularized within the MFI sector, I think Northern Arc and Samruddhi and other people are trying to work on that. I think those initiatives are also very much required. Now, we have one of the big players in the market, banks, because banks have been there very long and they have been working with the small customers and trying to help them and other things. We have Mr. Sridhar from Bank of Maharashtra. We'll learn from them as to what is that banks are looking at microfinance industry in terms, because as CGM sir was mentioning in the morning, banks can give the loans at a lower rate because that cost of funds is less. That's one thing. Second thing is risk pricing. Maybe banks have been following that risk pricing, but whether they are adopting that risk pricing in the MFI sector, that also he can bring in his discourse now. Mr. Sridhar, over to you.
Good afternoon, all of you. Thank you for giving this opportunity. I am representing Bank of Maharashtra in particular and SLBC in general. So, in both ways I am representing. Yeah.
Representing all banks.
All banks, and slightly I will tell, first I will tell about the Bank of Maharashtra, what we are doing for the microfinance. So, as you know, we are working through SHGs, that is there, all banks are working through SHG, financing this microfinance through SHGs, but specifically when it comes to Bank of Maharashtra, we are having one trust, that is, we are calling it as GMBM, that is Gramin Mahila Bal Vikas Mandal. Especially the trust, it is, that headquarters is at Hadassar, Pune, and it is working at 7 districts, where it is mainly we are working with the SHG formation, and we are helping the SHGs to get the finance, as well as we are helping them to get their marketing for their produce. So many times when the special occasions comes like Deepavali, then Ganesh festival and other festivals, we are arranging the marketing facility at our head office, and many times when the festival is big, just like Deepavali, then we are arranging the marketing for their produce at some marketplace, some main marketplace we are, and that trust we are working at present at 7 districts, and we are trying that particular trust will spread to all throughout the Maharashtra initially, and afterwards even other parts of India apart from the Maharashtra. This we are doing. So when it comes to, now it is a bank specific, I have told, and we are financing, that is there. But when I think it comes to the, as a banks as in general, all banks are highly motivated to finance the SHGs. Now, you know, every bank is having a lot of competition is there. I think HDFC Bank and ICICI have their own verticals. They are directly going to the village level, and they are dispersing within weeks time. That is there because they are having separate vertical. But unfortunately, the public sector banks are not able to do that. But all the public sector banks are also having a lot of, they are having competition within them, and everyone is financing, and everyone is saying that the particular SHG which is there in their area, everyone is dispersing within week or maximum 10 days. No, there is a lot of competition, so everyone is doing that. The only thing what I feel, because I am basically from the agriculture background, graduation in agriculture background, and I masters in the rural development. So what I feel is there is some issue with the SHGs. There is absolutely there is no issue with the SHGs. When it comes to SHGs, absolutely SHGs are doing very good. You know, the most successful program in the India till date, it is the SHG movement. When compared to a financial inclusion or when it comes to a microfinance. In both the way, the SHG has done a great job to India. Now the growth is there. The only thing what we are feeling is that guidelines of 1:4 to their corpus. That is the main issue, because now it has under NRLM they have slightly changed that the first year first range we can give up to 1.1:6 of their corpus. Because it is a 1.50 lakhs is that corpus, that total amount we can give it first year. So what they are saying, the guideline says it is a 6 times of corpus or a 1.5 lakh which is minimum. So what is happening when if a particular SHG is collecting 1,000 rupees in a month, and if it is 1 year is there, then also they will be, their corpus should be at 12,000. So 12,000 if interest and something is there, it is 12,000 odd. We can 12,000 and 12,000 into 6, it is around coming unto 72. So 72,000, that is the and minimum is 1,50,000. So 1,50,000 when we are giving, so that is not sufficient to start a business or anything within the SHG members. So there is a creating problem. So SHG members are in compulsion, they are taking finance at individual level with the banks or NBFC. And just I was reading yesterday some paper, article, in that there usually these the microfinance, the individual member, they are taking loan from the 4 institutions. If that 4 institution, and as we were seeing that presentation, as a particular member take a loan from more than 1 institution, or it will cross a 4, automatically the delinquency is increasing. That is there and that is proved. So main problem, because we are not able to give more amount to the SHGs, the SHG members are in compulsion to take the loans at the other places with the higher rate of interest. Otherwise, the all public sector bank and Bank of Maharashtra in particular, they are doing very wonderful job in the SHG finance. Everyone is having that motivation, with a lot of motivation. Every banks are working and they are finance. The only thing I find the problem is that 1:6 or that 1.5 lakh. It is now 1.6 lakh. Just a year back it was just 2 years back it was just a 1 lakh. So my concern is from as a bank as a whole, it should be increased. So the SHG members will get a finance at low rate of interest.
Thank you, Sridhar. I think the public sector banks mainly focus on the SHG lending. The microfinance is done through the wholesale lending part. That is one thing. Now the private sector banks are acquiring MFIs for undertaking the businesses. I think there we need to see the start of reduction in rate of interest. I think Swatantra is represented, one of the representatives. They have shown the way for other MFIs to see that they have brought down the interest to 19%, if I remember correct. Maybe that should lead the way for the banks to reduce the rate of interest. Now I will open the forum for questions, because RBI CGM sir is here and you are active participants in the MFI industry. If you have got any questions to the panelists, or even also we can seek guidance from the bank also. Another 2-3 minutes, we will take 2-3 questions if there are any. Any questions? Anyway, we are hungry for lunch. Lunch is standing in between us. I will not take much time. The thing is, I will go to the members with a very short question. How do you reimagine the microfinance industry, and what you should think should be done to make it future ready? Maybe one line replies you could give, so that with that we can close the discussion, so that we are in time for the lunch. Starting with Mahit.
Continuing with the triple bottom line approach, that is, while focusing on profit, we shouldn't lose sight of people and planet.
Dr. Mehta.
Responsible and ethical financing, more digital, but based on the needs of people.
Actually, even if we are going digital, still I think the sense of direct touch with the groups should not be lost.
I believe that my people are the first people to be taken care of. A happy staff is a happy customer in the end. So focus on my staff and also technology.
Yeah, I have already requested. Only thing is, that 1:6 is increased. Then we can increase our finance, and the people will get finance at low rate of interest.
Thank you for that wonderful insights. I think triple bottom line principles and also responsible lending practices, which even RBI and Sa-Dhan are advocating very actively. But it is up to the microfinance, because in the microfinance segment, what happens is it is the governing board or the head office which sets the rules and is followed by the people. If at the top level itself that conviction about the responsible lending practices are not there, it will not percolate down. Therefore, that has to come in at the governance level, at the top management level, that should percolate down. I think that is one of the important things. And moving to digital, I think there are certain frauds happening at the customer level because of the UPI and other type of digital products. How we are protecting the customers, client protection in terms of digital usage, that also comes as one of the important practices we need to follow going forward. And people, anyway, Gigi was also mentioning in the morning about the attrition in the microfinance industry. We need to focus on people, why people are leaving, how to nurture them. I think nurturing microfinance, nurturing people in the industry could be a long way for the growth of industry. We all will hope that industry will go at 25% with all these practices. Thank you all very much, all the panelists, for your insight, and thank you all for the active listening. Thank you. Thank you.
Thank you very much. The last round was really good. How to make industry future ready. Yes, very much. That was good. And also like what we were discussing about not to, lose the touch with the people. Although this using of technology is increasing, and it should be. It is good, but it should not. And another thing I really like is this your people oriented. Like this HR is very important for us. Yes, it's very much. One of the contribution of HR is that we have moved from that sporadic initiatives to this big industry. They have their pain points also. We need to take care of it. Thank you, all of the distinguished panelists, and for sure, Bhatt sir, you have always been kind to us and helped us in everything. Now it is the time to extend a little bit of appreciation to you people. I would like to invite sir, your Mr. Sharma, if you can come here and honor them. Thank you very much, sir. If you come to the front, yes. Mata? Meera side. Milka sir. And Mr. Bhatt. Please. take a photograph, please come in front. Group photo. Mr. Mohammed? No, no, it's fine. For coming back, and we will resume to one very important thing in the microfinance sector, which is technology. It's very interesting that, you know, over the period of time, the intervention of technologies have helped microfinance sector to do more works, more reaching to the more clients, helping them. Sometimes we also see that there are some challenges, certain challenges in technology. There are somewhere we have seen the mismatch in the technology. It's good that it is helping us, but somewhere it is also giving us some trouble, some challenges, something. But it has to be there. It is not only this repayment or something. There are also some far-flung areas where we cannot reach. We generally feel very helpless to reach there. Technology is the only one that only can help us. Technology can only help us to reach those far-flung areas. So there are different dynamics on the technology. But still we are seeing that only 15% or 20% we are getting it. Getting the repayment through technology. But it has to be a little bit more, and we have to be a little bit putting our effort a bit more to make it happen. So we pulled together while discussing with NIBM, one of the research area possibly of them is also this technology. When we were discussing one area we could figure out that where both of us we are very much interested to understand the technology. And in technology across India there are different models, different strategies, different companies, different possibilities. So it's a whole Iliad and Odyssey in technology. We wanted to understand that one. Where is it happening? How is it happening? So we brought together a couple of people who are the stalwarts and working in the different models. So our next panel discussion is on technology as facilitator for growth and responsible financing. In the last segment, we have heard that responsible financing is very much important. Otherwise, our portfolio will go for a toss. So in this panel, I would like to invite Dr. Dipankar Raj, Associate Professor NIBM, to moderate the session. Dipankar. Mr. Sanjeev Singh, DGM, Bank of Baroda. Shamil Mehta, Senior President, Swatantra Microfinance Private Limited. Mr. Sasidhar, President CEO of Sept Impact Solutions Limited. Mr. Sandeep Koujalgi, if I have pronounced properly. Yes. He is Senior Vice President Programs IIM A Venture. Ms. Kalpana Pant, Director Chaitanya, and Mr. Ajit Rath, Managing Partner and Head Strategic Partnership, Tier 2 Conclave. So over to you, Dipankar.
Yeah, very thank you, Dr. Sehgal, and thank you, Mr. Gigi, and the entire Sa-Dhan team for inviting me to this panel discussion and to moderate this session. So the theme of this panel discussion, in the morning we had a very good discussion on the basics of microfinance, models, products, etc. Now the focus is more of technology. The theme of this panel discussion is on technology as a facilitator for growth and responsible financing. So before I request my co-panelists to introduce themselves, I'll just give you a big background about the technology adoption in the banking and the financial service sector as well as India is concerned. So we all know that in the last decade, a lot of innovations have happened in the banking and financial sector space as far as technology is concerned. We have, of course, the PMJDY initiative has given rise to a lot of bank accounts have been opened, right? So the initial problem of financial inclusion, having a bank account, that problem is more or less solved. And now we have the kind of access was the next bit of a problem. How do they access their bank account, withdraw money, deposit cash? So the PC model, which is already there in existence for a long time, has even solved that last mile problem where banks did not have a reach, the VCs could reach these customers and provide them financial services through handheld technologies, which are typically called as micro ATMs. Then we also have seen there's a huge payment revolution that happened in India, the UPI coming in, and also the Aadhaar-based payment systems where people in the remote areas could transact and remove money from their account or deposit using those PC agents and all. So we have seen all that. The direct benefit transfers were possible. Directly the benefits could be credited to your bank account. That kind of technologies have also been there. So the payments problem has also been more or less solved. Now the next big issue is on lending. So we see that the lending is still a big problem in India. Still we see a lot of low-income households, MSMEs, they cannot get a formal loan from a formal bank and financial institutions. There are many number of reasons for that. But we see that due to the government intervention and RBI intervention, there has been a lot of these enabling digital lending ecosystems which have been created, like an account aggregator or open credit enablement network. And recently, last week, the governor RBI announced a unified lending interface, where he was kind of saying that a farmer, right, takes a lot of time to get a loan from a formal bank because his data is not available. His land record data, his KYC related data, or his bank account statement data is not readily available. So whether these emerging lending ecosystems can help bank to get this data for efficient underwriting and loan decisioning. So these are the kind of innovations which are happening on the tech side. But at the same time, the other key part of this panel discussion is on responsible financing. So we have the same time as we mature in our technology, innovations, products and services, we have also seen a lot of this digital lending apps, companies coming up and giving loan at higher interest rate or using some coercive methods to recover loans, right? And so customer protection is a big issue. Even there are cases of frauds, cyber security, those kind of things also happening simultaneously. But then we have to live with that as well as we mature in our innovation cycle. So with that background, I'll split this panel discussion into two parts. First of all, I'll request all the panelists to please introduce themselves and about their organization. So we have a very good mix of panelists here. We have panelists representing microfinance institutions. We have panelists representing fintech companies. We also have an accelerator or incubation as head of IIM Ahmedabad there. And so I'll start with Mr. Sanjeev from Bank of Baroda. Can you please introduce yourself and let us tell you about your perspective of MFI and the technology and how banks are helping the MFIs in adopting technology. Thank you.
Thank you, Mr. Patra. Good evening all. Thank you very much, Sa-Dhan, for giving me an opportunity. Bank of Baroda, as you all know, is not a new name, right? It is there in the system since 1908. So we are an 116-year-old organization with a total business size of more than 24 lakh crore rupees, right? We have a global presence in across 26 countries across the world. And we take pride in telling that you name the country, our presence in one or other way, we are there. So that is the bank's position. I am privileged and I am very lucky to got an opportunity to work with Bank of Baroda for last 25 years. So, bit of my own introduction, whatever is the view of, going to be of my personal view. So don't take that Bank of Baroda is telling this, right? So I have put in 25 years of service in bank and worked in various capacity as a from scale 1 officer till the rank of deputy general managers, as a branch head, as a rural officer, as an agriculture officer. Worked with a lot of SHGs and joint lending group, because 3 years compulsory rural assignment we have to do during our tenure, right? So that is an opportunity also, challenge also, but we learned a lot to serve the real masses of the country, right? In terms of whatever best we can do at that point of time. Now when coming in, working in the corporate office, we got a bigger horizon to cater to the bigger segment of the society, right? So that is one thing. As regard Bank of Baroda's position in microfinance, we are suitably placed amongst all the peer in the industry as far as lending to microfinance companies are concerned. Number one, we do direct lending also in various MFI schemes of NABARD, CP and other government institutions. So if you see the digital lending part, we take pride in telling that we are the only public sector bank which is beating even the private sector bank in terms of technology. How and why? You would have, nobody would have thought 5 years back that 5 lakh rupees of personal loan with a click of button in your mobile, you can get instantly credited in your account. So there was a time you need to have a salary account, you need to have a 6 months balance, this, that, so many income tax return and so many things you need to do. So there are underwriting model we have developed in-house where there are 36 criteria which filter them. The credit worthiness and the appetite depending on the average turnover in the account and kind of a thing. So we devised the model which has made the life very easy for a consumer in the retail segment, right? In the MFI and NBFC segment, we are very aggressive in co-lending part. I would request all of the MFIs who have not explored it till now. So co-lending is a one part. Since morning, so many regulators and one of the speaker also from CP has raised a question mark about the governance, right? So all these things will be taken care of if bank and the microfinance company or the bank and the NBFC come together and do a common lending program, right? So that's a platform-based solution, platform-based delivery, which is totally paperless, right? So everything is structured and prepared in a manner which will truly understand the need of the customer and then underwrite it in a very, very scientific, you can say AI-based model or this kind of a thing. So the point is that how to leverage the technology for the growth of the business. So take an example. There was 2014, as you know, Mudra scheme was, Jan Dhan Yojana saving account was announced. So few years later, there were a Mudra Yojana also announcement. So we can fund up to 10 lakh rupees. So it is totally now a platform-based sanction. So now almost huge amount has been disbursed out of Mudra loan. Forget about Mudra loan. During COVID time, 10,000 rupees, 20,000 rupees, you know, this Swanidhi scheme had come. Where even the hawkers, even the players who were not accessible to any kind of formal bank borrowing can take loan up to 10,000 very easily by giving some basic document, and that is also through platform only. Apart from that, if they repay that amount in time, they have an additional top up of another 10,000 rupees. So digitally, if you are making the payment through UPI and all these things, so you see a lot of hawkers, lot of sellers in the market now they are using the QR code kind of a thing, and they say that you even for buying 10 rupee or 5 rupee, you don't pay me cash. That kind of penetration digital has done. So through Mudra loan, a lot of disbursement across the bank, private and public sector bank have taken place. It's same way I would say that the technology part, now so many technology has come in terms of lending, where if you just upload your balance sheet, if you just upload your basic GST data and all, all due diligence will be done through the site itself. So gone are the days when manually one has to check it and find out the credibility, whether it is creditable or not, right? So everything is done scientifically checked, even your bank statement, right? Anywhere you maintain a bank statement, the bank statement analysis, we have developed our in-house capability where the bank statement analysis will be done in a click of button. So these kind of technology is only for leveraging the growth, and the growth ever since this technology in place. You will see the Equifax presentation, there is a growth of 40%, 45% in certain pockets, certain segment in terms of consumer loan, personal loan, and these kind of loan is because of technology only. It has become so easy to avail the loan through technology. So microfinance industry, as far as leveraging the technology is concerned, I would say they are required to do a lot of homework. Because many MFI whom we are interacting for the purpose of technology part, so they are struggling at that part. So let us spend some amount, some kind of your time and energy in building your own technology like good ERP system. I am there to take care of your ERP system once it is built in a very good manner. So I want to ensure that it is a paperless flow, not only the outflow of the credit but inflow of the collection also. So one gentleman in the previous panel was struggling for the e-match kind of a mandate, right? So we have a solution for that where the rejection will go even to 1 or 2. So 98, 97% success rate I can promise you even in e-match and OTP match. So that model we are already having, and a lot of NBFC and corporate are using it. So these kind of technology we are working. Now coming into responsible financing. How technology is going to help you out for the responsible financing. It is very, very important. It is only possible through digital penetration. You cannot enforce responsibility through a manual source. So if it is a technology driven, then you need not have to worry. Identification of borrower, right? As in the morning it was rightly said that activity-wise lending should be the need of the hour, right? So to identify the activity, then identify the correct beneficiary, then lend it to them, and then recovery part also mostly through the digital penetration. I think this responsiveness will increase further and hardly there will be any delinquency. Because what MFI is, end user are all rural people, right? And my personal experience, having worked 3-4 years in the core heart of the rural area, that is in a remote district in Jhabua, I have learned if the crops are good, if the season is good, their repayment is 100% loss compared to the suit and tie people, right, in the urban areas. So willful defaulter concept has come from the urban area, not from the rural areas, right? They are the defaulter only in case of natural calamities or in case of the situation beyond their control. By and large, that's why you see overall delinquency in MFI, in all the cadre, all the part you see, is hardly 1 or 2%, right? Out of the total present outstanding, whatever we have done. So coming back to that responsible finance and the leveraging technology, I think at Bank of Baroda we are better placed, and most of the MFI, including the Swatantra and other microfinance, are taking that advantage. You are also supposed to take that with the banks and all. So that is what my stake is.
Thank you, Mr. Sanjeev. So I'll now request Mr. Sahil Mehta, Mr. Shashidhar Tunduru, MD and CEO of Sept Solutions, to give his perspective about his company and how you are kind of dealing with the MFI tech problem and how they are helping them to solve things.
Thank you, sir. Thank you so much. Thank you, sir, for laying out the banking perspective. Sept is a company promoted by Basics, which happens to be the first commercial microfinance company in the country. So we kind of traveled the journey from the get-go when microfinance as a term was introduced in this geography. So we have gone through cycles. We have been an NBFC ourselves, very active in promoting Sa-Dhan. We have been credit bureaus and all that. So there was a time when a major crisis has hit the sector, which all of us know as Andhra crisis. That's when we were in the epicenter in Hyderabad, Hyderabad-based company. So we kind of reflected upon the business model and the way that we should be moving forward. So there was a realization that in the long run, perhaps a standalone microfinance as a single product may not be the solution for financial inclusion. We should rather do something to bring banks to the center of this business. And that's when micro business correspondence as a concept was floated. Basics has played a big role in even lobbying on that front. And when business correspondence was allowed to take on some of the banking activities, we have jumped into that fray and formed this company called Sept, which is a digital first company. The idea is that if we can build the right platform and we can take on some of the activities that a bank is not able to do because of various constraints, banks have their own structural and other financial reasons why they may or may not want to handle small ticket loans in a retail manner. So we thought we could be an aggregator. We can aggregate the demand for them. We can actually do all the work that a typical MFI would do, but it's essentially link the customer to the bank, so that the customer gets exposed to the bank, and then all the banking facilities that a customer is supposed to get will eventually get. Maybe it will first will be microfinance loan, but eventually they will travel the journey and their life cycle financial needs can be fulfilled, which a typical MFI may or may not be able to do because they have limitations. So that's the journey we are on. We are a business correspondent. We link banks to customers both on liability and also on micro lending side. So as I said, we are a digital first company. The reason why I said that is we have also re-evaluated the whole business model that we all started off with. The days when microfinance was started, I was one of probably the first field executives who worked in this space 25 years ago. Those days, we didn't have bank accounts. We didn't have proper identity. We didn't have data or phones. We didn't have any information about the customer. We didn't have credit bureaus. So there were a lot of constraints. Within those constraints, a business model was invented, thanks to a lot of contributions from Grameen, BRI Indonesia, and many other experiments that happened outside India. India borrowed a lot of these. Self-help group movement in India itself has been a great innovation. So we have innovated a model to overcome those constraints that day. And it worked. And the only way that we could have done it is we had to box all these customers into one straight jacket. Whoever wanted a small loan, we have to follow one specific process. And JLG became a modus operandi, and we ended up, building off of that. And it eventually became a, quote-unquote cookie-cutter business. It's a copy-paste business, if I would put it crudely. But as we progressed, you laid down a lot of development that happened in technology, payments, and many other platforms happened. People got phones in their hands, credit bureau is in place, bank accounts are in place, some data is available, customers are beginning to use digital platforms. The question today is that, was the model that was invented 25 years ago, although it might have gone through modifications, is it relevant today? If it is, to what extent it is relevant? We always see crises happening once in a while. We come back to the old story again. I think the time has come to actually apply technology and look at these customers not as one segment, but as multiple segments. There are a lot of customers that we work with who are very digitally savvy and very financially disciplined. Right? Somebody who's very digitally savvy and financially disciplined, I think you can apply a high-tech, low-touch model. You don't really need a very high-touch model for that customer segment. And those customers are increasing in size. At least in my ecosystem, I can say 25-30% of my customers today, I don't think even they need a single touch point. They will be happy to borrow if we can offer them a digital loan, and they'll be more than happy to repay back on time. Perhaps they need a nudge, they may need a reminder, but not more than that. There will be a set of customers who may not be very digitally savvy, but financially very disciplined. They will never default, provided they are reminded of and perhaps a visit is required. So this is a high touch, but perhaps low tech, because these people are not very technologically savvy. But we can educate them and we can actually help them travel the journey of technology. The third segment, which is the real segment that we need to worry about, is those who are not very comfortable with technology, but they're also not very disciplined in their payment behavior. I mean, for whatever reasons, we can't blame the customer generally, but people have their own cycles. With that customer, you need a high touch model, and you also need a high tech model, because there you need to understand the patterns of their behaviors. You need to use other data points to understand the risk levels. We need to be more vigilant about being in touch with them through both digital and physical channels. There's a lot of technology that will have to come into play to assess this customer or meet this customer. So I'm dividing these customers into 3 segments, not as one. One segment, high tech, low touch. Second segment, low tech, high touch. Third segment, high touch, high tech. Right? If we really do this and apply our technologies to the right use, scale will not be a problem, because you will be able to reach a lot more customers. Your productivities will go up. The loan officers will be serving a lot more customers. Efficiencies will go up because many of your customers will probably be doing digital loans, so you don't need to slog a lot. Your risk levels will go down, and which we have seen in our data very, very clearly. Why it will go down is because, as I said, digital customer, if he's a financially disciplined customer, you really don't need to do a lot with them. Now you have a lot of time to spend with the more riskier customers. Today what happens, an MFI loan officer spends equal amount of time with all the customers, high risk, low risk. Of course, a little bit more with high risk because they will follow up on collections. But if you just leave some customers alone and they pay on their own, you have a lot more time left to manage the delinquent customers. Rather, you can help them, manage their lives better. So we have seen in our data that about 50% of our customers today, they pay directly on our app. We don't visit them as religiously. We visit them once in a while. Remaining 50% we follow up very, very closely. Physical visits, group meetings, everything we do. And this digital set of customers are at half the delinquent level as non-digital customers. The customers who are paying cash are actually double risk than those who are on the digital. Because digital customers are also more responsible. They know that the data is recorded. They also are very aware of the implications of credit bureau on that. Another interesting point I will make and stop here. Digital customers also have demonstrated much better group behavior than non-digital customers. It also, the question leads to also, when you talk about technology, you should talk about design aspects. So when you design your technology to suit the business model, so we have designed our technology to retain groups within the digital world. We have WhatsApp groups, all kinds of groups. So you actually can create regional groups. So the customer, since we think group is a core to microfinance, we don't have to compromise that in a digital world. If we can help customers actually group themselves and behave in a group in a digital world, we have seen that group cohesion is much better in a digital world than in a non-digital world. Because non-digital world is very difficult. You have to bring people together. You have to actually tie them together in a physical sense. In a digital world, you don't need to, because there is a lot of UPI-enabled transactions that you can do, and people in fact, are demonstrating the behavior. So I'll stop here just to give you some perspective, but I just wanted to, propagate the idea that the time has come to apply technology to distinguish our customer needs and apply the right technology for the right customer. Microfinance will prosper very well. Thank you.
Thank you, Mr. Shethar. Now I will go to Mr. Sahil Mehta, the Senior President, Sa-Dhan Microfinance Private Limited. And I'll ask you to please tell about your company, NBFC. You're an NBFC MFI, which is the second largest MFI in India. So what kind of technology you have adopted, and what kind of challenges you see in the adoption of technology, and how it's helping out in your regular business? Know more about this.
Thanks, Mr. Roy. Very good afternoon. Delighted to be a part of this panel. I'm Sahil Mehta. I belong to Sa-Dhan Microfinance. So Sa-Dhan Microfinance is a NBFC MFI. We are having our head offices in Mumbai. We are having a portfolio of close to 15,000 crore. And we are having a well-diversified portfolio spread across 20 states, covering more than 400 districts. Now, coming to technology part, first I would like to discuss the segment which we are talking of, the rural economy. The rural economy contributes almost 45 to 50% to the country's GDP, whereas if we see the credit side, the credit contribution to this segment is close to 12 to 15%. I think the gap is wide, but still, microfinance companies over last 2 decades have done a great job in reducing this gap. And further, I think the technology will help a lot in reducing this gap. Overall, if we see last 10 years, last decade has been quite eventful. And in last 10 years, we have seen a lot of changes. A lot of companies, they have adopted a lot of technology, and technology has acted as a big enabler. Microfinance since its inception has been a high-touch model where like people used to go meet clients, because microfinance gives a unsecured loan to a client. Security is a trust which we build with our client, and the trust comes with the interaction with our client. So coming to now Swatantra Microfinance, we have been the very early adopters of the technology. We are the first NBFC MFI who since inception has been disbursing directly into the bank accounts of our client. Not even a single loan has been disbursed in cash to our client. So this I am talking of pre-Jan-Dhan Yojana and pre-demonetization. And in 2016 we have digitized the entire life cycle of our client, where right from sourcing to loan management and collection, we have adopted technology. And how the technology has helped us, it has helped us in bringing operational efficiencies. One of the most important aspects with respect to adoption of technology is that whether technology is helping you in reducing the cost of acquisition of your client or not, because it has to be sustainable. So overall, right from sourcing, we have mobility app. Then coming to credit assessment, we have integration with credit bureau where data is available on real-time basis. Earlier, when we talk of traditional microfinance, when we used to fetch credit bureau reports, it used to take 4 or 5 days. Now, we just put the KYC details of our client, and in seconds we have all the detail of our members. Then coming to disbursement, right from the very beginning, we have been disbursing directly into the bank account of our client through NEFT or IMPS. Then coming to collection. On collection front, on pure digital basis, our client has been paying, of our total clients, we are serving around 4 million clients. Around 15 to 20% they are using pure digital model, and rest we are dependent on the physical model. There are a lot of cash CMS partners who provide cash management services. We have onboarded them in our system, and overall it has helped a lot in overall reconciliation of our data. Overall, like how technology has helped us, like it has reduced the overall TAT. Like earlier, when we started, the total turnaround time for disbursing a loan was close to 15 days. When we digitized the entire journey, the total time reduced to 7 days. So it has helped us in enhancing the customer experience and increasing the productivity of our employee. So there is no duplication of work. When we talk of traditional microfinance earlier, like field officer, they used to go to the field, collect information, then they come to the branch, they will put in all the data in computer. Like one branch was having one system, and there were 4 to 5 field officers. They have to wait. Now, like there is no duplication of work. They go to field, they take the data, and sourcing is done. So overall, it has helped a lot. And on collection front, still a lot of things to be done, because on collection front, adoption is not there. The client base which we are dealing with, they are having limited literacy and they have limited knowledge of the banking infrastructure. But this is improving. I think in times to come, this will also improve, and this will help a lot.
Thank you, Mr. Said. Now I'll move to Mr. Sandeep Kojalgi. Mr. Sandeep is actually from IIM Ahmedabad. They have an incubation cell there, incubating startups and new age entrepreneurs. So I'll ask him to speak more about the incubation cell which you kind of work in IIM Ahmedabad, and also maybe throw more light on how you can help this new age fintech startups, right? And how can they add value to the problems of microfinance institutions, and whether you can how are you trying to handhold these fintechs so that and help them to learn the problems in the microfinance sector and helping to bridge the gap between these fintechs and the microfinance.
Thank you very much. So I represent IIMA Ventures. We were earlier called CIIE. This is, I guess, an early stage innovation support platform. I'll not just call ourselves as an incubator. We have incubation spaces in Ahmedabad, in Jaipur, and in Indore, and over 100 startups work out of there. We also run multiple programs through which these are typically targeted at very early stage startups, and these startups could be located anywhere in India. We are not restricting ourselves to students or alumni of IIM Ahmedabad. And most of our programs are theme-based. As an organization, we have 3 focus areas. One is, of course, deep tech or hard tech, as we call it. We also have climate tech, and the third, very important, is inclusion. And in this inclusion area, in fact, for the last few years, we have been running a program. It is called Bharat Inclusion Initiative. And for the last around 5-6 years, we have supported over 50 fintechs, typically in early stage. These fintechs have been working across different fintech domains. People who are doing credit, again, both personal credit as well as enterprise credit. Enterprise, again, we're talking of small enterprise credit. They'll be looking at savings, they'll be looking at insurance, and a lot of fintech enabling kind of solutions also. The focus of the program was also on serving the lower middle income segments of the country. Right? So whatever I'm bringing to the table is partly my experience of working with these fintechs. And our approach was very simple. A lot of the customers are now adopting, they have bank accounts, they have access to the digital public good platforms, the Aadhaar, they have access to UPI, and variety of other upcoming platforms, including, the latest one, which is account aggregator and related platforms. And all these are now opening up opportunities, right? I think all of us know how important KYC has been and how Aadhaar has played a role in that. And so with this technology backbone, with the Sa-Dhan bank accounts, and with, I guess, an increased access to internet-enabled mobile phones, there was now a way to reach the segment more efficiently. And that's where the opportunity for startups came in. What we also realized as we did the study was that most of the startups, especially if you look back, 7-8 years ago, most of them were serving this top 5%, 10% of the country. While people would claim that we are serving the entire country, they were really designing it only for the top segment, and maybe that was the easier to reach segment. But there was a very large middle India and some of the lower income segments which were unserved. And we wanted to help startups to essentially build products, putting the customer first, and then build from there, and then validate their solutions, and then of course build to scale. So our approach was very simple. Our first intervention in some sense was to build a sort of a customer centricity in the product build, right? Or when we are in an industry that's so regulated that managing the regulations itself is such a hard task. We tend to be very supply oriented. So we took a different approach. We have tried to be customer first. Any design of interface, design of the product itself, all of them has to start from the need of the customer first. So that's the approach that we took. We validated those solutions in the market. Naturally, at a very early stage, we had to be very tolerant to failures. quite a few products that we supported also failed in the market, right? And especially, and these could be failure of adoption by the customers, this could be failure of unit economics, right? Or it could even be a failure in light of regulation and other situations. For example, when we had COVID, we saw quite a few startups there actually shutting down because there was really no way for them to even go to the market. And over years, I think we have built a good portfolio of startups now. Our approach, in some sense, has now shifted, from probably, and while we'll continue to work with new products, I mean, that's something we'll not, give up on. We think there is always scope to build new products because new platforms are being developed, new needs are emerging in the market, new customer behavior is being seen, so there will always be new products coming in. With these products that have been validated, we are actually now going into the market, talking to a variety of people and forging partnerships. So especially with MFIs, in fact even with Sa-Dhan, we have been working to explore how at least some of these fintechs which have products that may be relevant for MFIs, how can we help them forge partnerships, how can we help support pilots between fintechs and MFIs, and even support these pilots, both financially as well as through technical expertise. How can we support so that we can validate whether there's a model in which both of them work together? We believe very strongly that, fintechs or these new emerging, startups, these enterprises, and the existing regulated entities, the existing players in the market, they need not compete. The way to go ahead is to cooperate. Both of them can bring value to the table, but our role here is to facilitate that. Right? So, and it's in some sense to bring, not just to bring both parties together, but also, support them in finding a way to work together. And that's what we are also looking for. And even in fact, over the next few years, we'll continue working on this. We'll continue not just looking at these new ideas. We are also looking at you to also let us know some of your challenges so that we can find those innovators who can build. Though we, as an organization, can bring in resources to build products, but we look towards you to also tell us what are the right products to build. So looking forward to it. Right. Thank you.
Thank you, Mr. Sandeep. Now I'll go to Ms. Kalpana Pant, who is the director of Chaitanya. So they are working with the SHG communities and probably helping them to get loans. But I'd like to know more from the tech perspective how you manage this entire SHG business in your organization. I think you have a presentation that you want to make.
If it's possible to connect it, that will be nice. Thank you so much. I think first of all, let me share that my perspective is not necessarily from technology for scale or efficiency point of view. We are looking at technology and the Self-Help Group Federation program also more from women's empowerment point of view. And financial inclusion is a means and not an end. And therefore, even in technology, the SCG Federation program has been a late entrant. We are one of the last ones in the SCG program to have entered. NABARD came up with eShakti program, and there were a few organizations like Sa-Dhan Foundation that had software solutions. But the limitation of these software solutions was that it was either SHG internal loan transactions, or when the self-help groups were getting linked to banks, the amount was talking only about loans to SHGs. Beyond that, the member-wise transactions were not getting tracked. And therefore, even though the SHG bank financing has been the largest microfinance program in the world, if I think so, the years may have changed, but till today, it's not possible to get idea of what is happening to that individual SHG member's lives once she gets a loan from the bank. Because the bank loan and the bank tracking is only till the SHG level. And beyond that, what's happening, none of the software solutions have been able to provide that, be it NABARD, e-Shakti, or a lot of other microfinance institutions. Of course, looking at this and with the support of SIDBI, Chaitanya decided to start with a new comprehensive digital solution, and we have been in Sa-Dhan and MFin space. So in Sa-Dhan and MFin space, we talk a lot about SHG, women's empowerment, and in the women's empowerment space, we talk a lot about how access to finance promotes women's empowerment. So we are somewhere in the middle. And with inputs from a lot of the microfinance institutions, we have designed a software solution, Microlekha Wise. Can we have the next slide, please? Which is the solution. Yeah. It is the solution which currently you all must be familiar with the National Rural Livelihood Mission promoting a 3-tier system, the SHGs, the village organizations and the federation. Now across these 3 levels there are financial transactions happening at the SHG level, at the village organization level as well as at the federation level. This system currently tracks financial transactions across all these 3 levels apart from the SHG bank linkage program as well. So if we look at the, I'm not very sure if it's moving forward. Yeah. And just this, okay, thanks. So it integrates multiple functionalities and very, very user-friendly is, we have currently the field staff who are primarily SHG members who are promoted as community resource persons. They are currently using it. It is mobile-based technology solution. It reduces the turnaround time, while of course some of these aspects are very important for the SHG program as well. Improves the repayment efficiency, as well as this is the only solution where we have staff performance tracking system. So in terms of, so these are some of the aspects that we have taken from the microfinance industry in terms of how efficient is the staff who is interacting with the SHGs and whether the loans are effective enough to meet the sustainability of the federations. So yeah. So there are 3 basic objectives. Of course, the financial management, user-friendliness, and the reports that would be used by the federation office bearers. As you know, this is a community-based institution, so the federations should be able to use the reports. So some of the key features that are there, most importantly, it's an offline solution, online syncing, it captures all the transactions. We first get the audited SHG data onto the system, then this is called a zero meeting, and then the transaction meetings start. There is a lot of flexibility. So Chaitanya has designed this after experience with a cooperative based software, then with a microfinance software as well. And we found a lot of limitations. See, the challenge with the SHG program is that there is a lot of inbuilt flexibility, like how in typical microfinance institutions you have installment repayments. Here, if a member wants to, she can prepay extra. There are prepayments, almost sometimes 20 to 30% of our loans are prepayments. So the system should be such that it captures such flexibility. There are differential rates of interest. To be able to recalculate the installment amounts once the prepayment has been made. A lot of this flexibility has been built into this system. Most importantly, the masters can be designed by the administrative person, the admin of the software. So if there are 4 to 5 or 10 different savings and loan products that are all inbuilt into the system. Very importantly, we have, if there is someone from NABARD, we have also integrated the capability tool that NABARD with the support of GIZ had done a study of, and we designed indicators, and that is part of our financial capability tool that is very much inbuilt into the system. So you can, when the first loan is taken, you do a test of that, and then the second and the third loan to be able to understand how the change has been made. In SHG program, we have an issue of cash in transit because the money gets collected and it's not deposited in the bank. There is a time gap. So how it is accounted for. Then staff performance reports and duplication, of course, because Aadhaar numbers are also part of the basic baseline data entry. It is in 3 languages, currently Hindi, English and Marathi, and used by federations promoted by Chaitanya across 13 districts and 1.25 lakh members. And now Maharashtra Arthik Vikas Mahamandal, MAVIM, has also taken the software and is currently being rolled out across Maharashtra, all the 295 federations promoted by MAVIM. So far we have around 90,000 SHGs data entered into the software of MAVIM, apart from Chaitanya's 10,000 plus software. Yeah, so this is the system that we have, baseline and meeting transaction entries, both at the group and the member level. Every loan, be it the bank, the village organization, federation, we enter the transactions member-wise. These are some of the basic information details. So, to be able to resolve large-scale data migration, see, this is, I think we are on different platforms here because the SHG program, considering the scale of operations and the level of literacy and digital literacy of the members, including the facilitators or the community resource persons. It's very, very important to design a system which is very simple, easy to use and very flexible as well. So having one-time data entry, ensuring very simplified auditing of current accounts because sometimes the manual records are also a bit of a question, and then generating monthly sheets and ensuring that they are validated are some of the major challenges that the SHG Federation program was facing, which we have been able to solve. Because it is simply supported, then of course progress out of poverty index is an integral part of the system. As I said, financial literacy, the financial capability tool. We have system generated rating report, especially for the banks which are here and providing loans to the SHGs. There is an automatically system generated rating report which talks about frequency of meetings, how much is the savings collected, repayments, so on and so forth. And then of course some of it is manual. We are also requesting the banks, when we are partnering with Syndicate Bank, then now Canara Bank. So we also generated bank loan application format, and one of my requests to this forum would be, if all the bankers could agree on one common banking format which is part of this system, then there could be system generated loan application format that all the banks could agree to, and then possibly with just signatures we could proceed with the SHG Bank Linkage program, which will reduce the turnaround time even further. We have a separate capacity building tool and the staff performance. So the VO application has been an innovation that we have just started with, tracking of all that. It's on Microsoft Azure. Is the server where these are the dashboards which captures basic information age-wise reporting. It captures the socio-economic profile of the members, and you can just see the possibility. The fact that MAVIM has 88,000 SHGs, which means 8 lakh plus members. socio-economic profile, their financial transaction all on one system is itself a big thing. There is one more innovation that we have done. Just as you have a CIBIL score, we thought for the SHGs there is a need for a score. How do you score the member? And this is a discussion that I had in one of the Sa-Dhan meetings, and Marvin also was asking us that we need to be able to present to the banks what is the score of each SHG member in terms of the so credit rating right now, because Equifax and Highmark are not still considering the SHG credit performance. Can we look at a Y score from the system itself? So we have designed 6 indicators for that, which includes credit history, which includes credit utilization, their discipline in terms of regularity of meetings, in terms of income generation, savings. All these aspects are collected from the system itself to generate a score for the member, which can be shared with the bank to say that now they are eligible for micro-enterprise loans, so on and so forth. These are a range of reports, and if you can see, we have member reports also, which will give you an idea of what is it that the member has done in terms of savings and credit. Of course, the DCB, the performance report, demand sheet and all are already there. We have separate repayment scheduler also for the member as well as for the SHGs. And of course, the business, the purpose-wise loan analysis, purpose-wise default analysis are also part of these reports. Yeah. So in a nutshell, this is what we are doing in the SHG field. The National Rural Livelihood Mission Joint Secretary then, Meeta Kejriwal, looked at our software, and the new LocoS software that is there is developed by the developer that did Microlekha. And we are supporting NRLM also in terms of designing and working on it, especially the rollout part.
Thank you, Ms. Kalpana. Now I'll ask Mr. Ajit Rai. This is the managing partner and head strategic partnership Clear Do Fintech. So among all the panelists, he's from Fintech side. I mean, his company has developed a solution for handling the debt recovery issues. He has a tech-based driven solution for. So I'll request Mr. Rai to highlight more about your company and this solution, this recovery solution in particular.
Thank you, Mr. Deepankar. So my name is Ajit Rai. I represent a company called Creative Fintech. We are a technology-driven collection company, and we are a company which is started some 3 years back. While we are in this industry for roughly about 15 years, we are largely serving banks, NBFCs, microfinance companies, and ERC. We are completely, a technology-based collections. We are not into the field collections, and we handle roughly about 4,500 crore of pool, out of which currently the microfinance pool is roughly 1,000 crores. So that's what we are doing, and we have a team size of roughly 1,500 people. We have a digital technology, call centers which is spread across 4 locations, that is in Chennai, Coimbatore, Ahmedabad, and Puducherry. So, what we do is we have a complete tech team who has been working very closely with the, if I talk about the microfinance company, we take the complete feedbacks from the market, the people who are down, we take the feedback, understand the pain points of the collections, and accordingly we design a digital journey for them. So it's a complete CRM which we work upon. It's a complete ecosystem that we develop. With our association, though we are very new to Sa-Dhan, thanks to Sa-Dhan, we are considered as for the relationship towards just 6 months. But we have been predominantly handling the microfinance institution tools for more than 2 years. So whatever we gathered, we see a lot of technology which is missing there. While I say that on a LOS side or on a decisioning side, there are some bit of technology which is available, but when it comes to the receivable management, which is very, very critical. Because today for any institution, any institution, lending institution, the health of the institution will purely depend on what kind of the delinquency book they have. So the lower or the lighter the delinquency book, the better it is. So and in this industry, the model is such where the FO is one who sells, is one who collects. So he is one who is doing the double hitting, the risk of responsibility. So at the initial days of the month, he would be in a position to do justice to both his sales activities as well as the commercial activities. But when it comes to the fag end of the month, his inclination goes towards more sales than collection, and there the slippage happens. So anything which is moved out of the X stage, what I have seen, what I have experienced, it was directly to 90 that NPA pool in just 3 months' time. It becomes very, very difficult. While the on-time payment we claim, I've been part of some of the seminars. The institution they claim that 97, 98%, 99% of on-time payment. But even that 97, 98%, 99% on-time payment, 2-3% flow, right, is actually too big, right? And that becomes, that accumulates and over a period that becomes the biggest pain area. And knowing that this industry, for anything which is written off, there are hardly any ARC solutions which is available. There is no ARC who is, to my mind, who are willing to take it to. Hardly there may be few. So here in this particular industry, particularly for collection, as much as it is important to design the technology for onboarding or underwriting, it is very also similarly it is very, very important to design something for the technology for the collections also. So we are working with microfinance companies. Roughly 5-6 we have already signed up, and we have been successful in giving them solution and supporting their collections. What we want to do is to work with Sa-Dhan, identify particularly the microfinance institutions which are of small or the medium size, 500 to 700 crore AUM kind. There we support them with an ecosystem, for them for collection activities. This is what we feel that we should do. We are lighting with the microfinance companies, and we have been successful also. And and here also, I would just say if there is any technology piece, because we have a very big team of people who are actually working very closely in devising and modifying the platforms for microfinance, suiting the microfinance companies. Lot of automation, lot of data analysis, lot of AI, lot of omni channel communication thing put together. All we are devising the solutions for microfinance company. So anything I would lastly I would say if there is any technology based collection requirement you feel in your institution, please remember one name, that is Clearview. Thank you.
Thank you, Mr. Rajit. So I don't know whether we have a time for a second round. Under 5 minutes. So I'll just quickly summarize the deliberations, and maybe we can open the floor for some questions. Yeah. So it was a very nice discussion which we had. So starting with Mr. Sanjeev from Bank of Baroda, he gave us a perspective about how Bank of Baroda is doing as far as digital lending is concerned. He talked about he spoke about the new age underwriting models using AI, which even banks are today using, because a lot of the data which we can get in today's times is not the perhaps the traditional data like your salary slip or your income statements or stuff like that. So you have to rely on a lot of alternate data, and really banks like Bank of Baroda have developed technologies, underwriting models to underwrite borrowers where the data is a bit of a problem. He also spoke about co-lending, and he also talked about how he, in his bank, he has developed a bank statement analysis, because most of these loans, digital loans, unsecured loans, they are being given based on a bank account statement analysis, so the cash flow based lending. He spoke about that, and he also mentioned about the type of customers in rural areas where the repayment records are quite nice in compared to that of in a person in a metro or urban area. Then Mr. Shashidhar from Sept Impact, his company is more from corporate VC side, so they act more as an aggregator, and they try to bring the customer near to the bank and try to acquire customers on behalf of a bank and try to provide a lot of solutions. So they have built a model to overcome various issues pertaining to data, KYC and all, and they also look at customer in multiple segments, so financially savvy, non-financial savvy, high touch, high tech. So that's a way for how we need to segregate our customers and kind of develop products and services and solutions depending on their requirement. And he also talked about that finally digital customers are more responsible than non-digital customers. That is what is their observations. Thanks for your views on that. And then I go to Mr. Sahil Mehta from Swatantra, which is they have is a NBFC MFI, and they have totally digitalized the lending journey. Right from onboarding to loan management to recovery, and they have also observed that there is a lot of operational efficiency that they have could attain due to tech adoption. Then I'll go to Mr. Sandeep from IIM Ahmedabad Ventures, where they support the fintech companies. They try to understand what is the problem of a typical microfinance institute and how fintechs can support them in developing solutions. So he spoke about that currently fintechs are supporting only the top 5% of customers, but the IIM Ahmedabad Ventures, his incubation hub, is also trying to guide the fintechs and so that they can target the other segments and develop solutions as well. And they're also helping in this the bank fintech collaborations, partnerships. They are kind of helping in that. And then Ms. Kalpana from Chaitanya, she demonstrated their entire SSG management tech solution by the name Microleka, which is an end-to-end SSG program management. So it's quite an innovative solution that they have developed in order to improve the SSG business in their organization. And finally, Mr. Ajit Rath and his company Clear to Fintech, he spoke about how they have developed a collection solutions, because collection is a big pain point. Even traditional banks face a lot of problems in collections. Some of the collections may be through cash, some of the collections maybe through digital technologies. But how to integrate both of them, how to improve the efficiency of collections through the hand. So they have cracked that problem and have developed a solution to address that. I thank all the panelists for sparing their time and coming to NIBM and the Sa-Dhan collaborative program and discussing about their company's product solutions and to address the microfinance problems of technology. And now what I'll open the floor to the participants. If you would like to ask any specific question to the panelists, we have some time for that.
Exactly you are doing with syndicate bank?
So Syndicate Bank now has merged with Canara Bank, and we are corporate business partners of Canara Bank, where for the first time the bank has accepted a 5% this VC commission for loans. So that is the public sector bank accepting this for SHGs. We started with dual authentication, where we had bank sakhis who would go to the SHG meetings and do the collections. But with some of these, we have faced challenges in terms of verification, in terms of fraudulent activities possibly happening. So that is something that we have discontinued. But with Canara Bank, we have VC operations, and we are using this software. We had designed a loan application system which was accepted by Canara Bank. It was a system-generated loan application where all the data of the SHG would come from the system, and the members just had to sign, and bank would accept it. But then, of course, Syndicate Bank got merged with Canara Bank, and therefore now that we are working with Marvim also, we are looking at an acceptance of all the banks. That would be much better for the SHG program per se, is what we are asking for.
That's why I was asking about Syndicate Bank, because you started with Syndicate Bank. So what was the association? Thank you.
Yeah.
Sandeep, I have a question for you. You had been looking at the fintech solutions and had been also having interactions with MFIs. And we together did some 3 workshops also in 3 areas. Has any of the product has been accepted by the MFIs? Any of the product has been given?
Yes. So I think some discussions are going on. I think specifically if you look at one discovery, there they have an insurance distribution platform. They are discussing with a couple of partners there. We have another one, I think a similar solution just focused more on collections. That is also something which is being explored. There is another solution, Coach, which is actually looking at a customer onboarding kind of a solution for MFIs. They are also in talks, and one pilot sort of has started when it comes to MFIs. So some discussions happening, and somewhere we are almost getting started with pilots.
Any questions from the audience? Okay, if there are no further questions, then we can close this panel discussion. I can thank all the panelists for being here and enriching the discussions. Thank you.
Thank you very much. So it was wonderful discussion over here, and we could understand different models over here. Somebody is talking about, and I'm very happy to hear that from the banker's perspective, that they are looking forward. One of the things I would really request them, if you can also help microfinance institutions to build up your technology architecture. If you have any soft loan or something, if you help them, apart from your general loan, like this, your term loans, if you have something, it would be good for the MFIs. Because I forgot to mention that a lot of API technology we are using right now from the microfinance perspective, apart from the lending part, for the collection and the payment service. So the biggest challenge what MFI have been facing before the invention of this API technology is a real-time information. Right. Number one, and then the reconciliation of the various. Everybody has a base of like 40 lakhs customer or 30 lakh customer or 20 lakh, 50 lakh. Spread across all the geographies of the India. So we have devised our own customized solution for that, and that is helping a lot. We have experimented with 2 or 3 microfinance, and they are like became our brand ambassador for percolating down the line. So that we can exhibit to all of you. So we are also looking forward from Sa-Dhan's end to have interface between the technology companies, banks, and also CTOs of the microfinance institutions. Very soon we will be announcing it. Thank you very much once again, Dr. Roy. So this is the time to extend gratitude towards you with a small token of appreciation. Mr. Mohammed, if you can come here. There's no one else. So, Dr. Roy. Mr. Sanjeev Singh. Mr. Sasighar. Mr. Sahil Mehta. Mr. Sandeep. Now this is the time. This is the time for a photograph. Please do come here. And Kalpana is there. Sorry, Kalpana. Who is there? Oh, अच्छा, sorry. Yes. Kalpana, please come here. And Mr. Ajit Ram. Please come. So now everybody needs to come here. Take a photograph. Madam. So now we are coming towards end, and I would like to invite Dr. Anjan Roy, Dean Research, to sum up today's deliberation. He is making my work easier. Thank you very much.
Good evening to all of you. It was really wonderful to be sitting over there to listen to all the deliberations, and it was quite amazing and a lot of vigorous discussions, a lot of points. So I've been trying to write down some of them to the best of my capability. And let me begin from the very beginning when we started the discussions. And I was quite amazed actually, right at the very beginning when Mr. Maman, you came in, and one of the biggest challenges that you provoked for all of us was the HR challenge. And particularly that there is a kind of a business, high-touch business, and then there is a new generation people, young people who are working, they are working at the ground level. So how do they get attuned to this model? So it really began with a very important and on a sensitive note. As we went ahead, we had Mr. Sharma from the Reserve Bank of India, who described quite succinctly about the regulation, the logic of the regulation, the achievement that we have had, and the gaps that we have had. And while doing so, he specifically mentioned some very few important ones, particularly that about the increasing over-indebtedness of the borrowers. He also said first about a lot of good things, the positive aspects of it, but then there are some challenges as an indebtedness, and then about whether the impacts are really being felt, the issues of the interest rate and the possibility of bringing down the interest rate for the borrowers so that this particular model can be very sustainable, notwithstanding the regulatory practices. We had presentation from the NABARD, and where one of the most important linkages was the SHG bank linkages, where it was deliberated quite in detail, and particularly that this model is based on the phenomena of nurturing, and nurturing will require patience, and that is the challenge possibly as we go ahead when we have, again, it comes down to the HR, and at the ground level, the processes she mentioned that was very, very complex. So how do we really get to all these kind of things together and bring about financial inclusion? Getting credit, getting savings, getting insurance, getting the livelihood activities in place, so that again the point, it seems to be all pointing towards sustainability of this model, including she mentioned about the credit absorption capacity, and one point that came up a number of times was credit plus approach. To understand what this credit plus approach is, then again we had another speaker on this. I will come back later. We had some discussion by the State Bank of India, particularly on the process, because there is a very big bank, very process-oriented bank, step 1, step 2, step 3, and so on and so forth. And in that particular discussion, one important point that came up was the financial literacy campaigns. So, being such a big bank, they realized this particular thing, and I guess that is something that in all the models that whatever model we pursue, financial literacy, responsible lending is one thing, responsible borrowing should also be a part of it. We had the discussion by SIGBI then, and particularly again coming on the impact on financial literacy and financial inclusions. Thereafter we had a very quite nice presentation by Equifax, wherein Ms. Shruti Joshi, she presented the status and trends of microfinance, the asset qualities across the various zones and across the various states. Few particular things that came out was, one of the things that I could take out was the number of lenders being a very important factor, apart from various other external factors that would come to play in terms of determining the delinquency and the default rate of the customers in this. In doing so, she also raised another very important point that seemed to be about the saturation. Now, as we look into expanding into various markets, are there some markets where a great amount of saturation, like MP and Maharashtra and Gujarat she had pointed out? Can saturation be an issue? Can we really realize what is the potential for growth in this market, and accordingly take very careful, calibrated steps when we are going into these markets? Coming to the panel 2 now, when we discussed about several different products, which was led by Mr. Bhatt of FWWB, and we heard from Madam Medha Samant from Annapurna, and that was one very impressive kind of discussion we had on the cooperative model of microfinance. So there also, while speaking of cooperative model, she highlighted time and again about the credit plus approach, and in that credit plus approach, bringing about a large number of other products, particularly about the insurance product, about social security. So that gave a kind of a different viewpoint, that it is not just a commercial business, it seems to be more of a social business. So when she says that Annapurna is basically parivar, so how as a microfinance institutions we bring up these ethos of lending into our business model? We had Mr. Medikar from Sampada, a very small microfinance, which is again lending to some very specific sector, livestock particularly she says. And here we understood about some of the challenges that these small microfinance institutions might have, particularly, for example, is about their funding. So they have to secure their funding from various other institution sources, and if their rates of borrowing from these insurance sources are high, how are they going to sustain themselves? But in saying so, one important point he contributed was again about responsible lending practices. That we should have our connect with the borrowers. When we are looking at the livestock, we have to understand what kind of livestock and all those things, right? Insurance of those livestock. So a good amount of even from a very small microfinance organization, we get a very good information from them. We had Mr. Satish Rao of Hindustan Microfinance, who, interestingly, I think that's an NBFC MFI. They described their evolution through the various product innovations from 2002, 2016, and then coming to individual loan and so on and so forth. They have particularly talked about the collection moving to individuals and understanding the community. This is another very important point, that understanding the community, that segment as such, so that we are able to understand their needs and accordingly create a product and dispense it for them. We had Mr. Mahit Pawar from Samriddhi, who talked of very interesting projects. So that was another dimension that they were just talking of water conservation and sanitation. So there could be some very niche areas wherein the microfinance products could be targeted, could be new markets can be thought in that regards. Bank of Maharashtra came in at the end in that particular section, and they talked about their own, whatever activities they are doing, the way they are doing this, their own microfinance business. Particularly, they pointed out the importance of the size of lending, that 1:4 or 1:6, and possibly there could be some kind of a constraint which the regulator or the people who are making the rules might have to have a look at it, in order that the flow of finance in this sector becomes more streamlined, etc. This panel we had, led by Dr. Dipankar Roy. We started with Mr. Sanjeev from the Bank of Baroda, and very important. This panel brought in a lot of important points relating to technology. It began with talking about co-lending, talking about mudra, he said about building your own technology. That is something, of course, they're a big bang. But then, how do you get your technology and how do you use technology? There is a potential for technology for responsible financing. And at the end, he also made that point about the API-based technology and having real-time data. So there is a kind of a light at the end of the tunnel, that technology can really be used for this kind of a small ticket lending in a much more better and purposive way. Mr. Shashidhar of Sept talked about several very important aspects. So, and what I really, my takeaway from him was, he spoke of using technology in finally segmenting the customer segments. So those customer segments who are very good at usage of technology, and they are very good at their own behavior also. So if you are able to segment the customer when you're finally using technology, one very important gains that we have, my utilization of my human resources will become much better. So this way, there is a very important role of technology that we are able to see. Mr. Sahil Mehta from Sa-Dhan talked of operational effectiveness, use of various technologies in various parts of the lending cycle. So that's a very interesting thing. A lending cycle has got so many different components, so many different technologies can come and say, well, I can do this better, I can do that better. But having said that, he made a very important point, and that is, all said and done, the end of stage, that's a collection. There, the adoption of technology is yet to see greater improvement and so on and so forth. Mr. Sandeep from IMA Incubation, he brought in another aspect, that there are many different companies, many different incubators, accelerators. Development of technology is also another aspect that we as microfinance institutions, we should be aware of. We should find out from where new technologies that are coming in can help us in the various stages of learning. IMA Incubation seems to be doing quite a human's job in trying to support these kind of fintech startups, in connecting those startups with the MFIs and in creating those partnerships and so on and so forth. Madam from Chaitanya, Madam Kalpana Pant from Chaitanya, she talked of the SHG valuation model, and we learned a lot about the software solution called Microlekha, and in particular, how comprehensive this software solution is, that with multiple functionalities. More interestingly, she talks of flexibility, still keeping it simple, and bringing in about the scoring of the members. So a lot many added values we can find from these kind of softwares that are possible by usage of technology. Mr. Kant at the end, he spoke of the elephant in the room, and that is the use of technology at the collection. So possibly they are trying to work out, and they may have come up with a product that they are able to bring in technologies to help the microfinance and other lenders how to better your collection system using digital. And
One important takeaway from there is that we need to really look at technology in a much more bigger frame than just simply going and collecting. It talks of developing an ecosystem. So which means that collection itself is actually a very a very nuanced kind of an activity which we need to really have a look at it. So I guess those were the key points that I could get from the various discussions, and I hope I'll be able to put them together and provide to Sa-Dhan later.
Thank you very much. So, Mr. Mohan, if you can come here, it's also appreciation from our end. Yeah, very nicely, crisply done. I would also like to invite Dr. Naveen, without whom we couldn't organize this one. Sir. 14 left. Dr. Deepankar. So thank you, Dr. Roy. You have actually saved my time, and also you have pointed it properly. I would like to get it from you. That's what I was also noting, but you have really made my life easier. And it's the time not to say goodbye, but possibly a new beginning with all of you. And it's also possibly a new beginning with NIBM. There are a lot of areas which we could identify that we can work together, especially in the space of financial inclusion as well as technology. In HR also. So thank you very much for hosting us and be working together and make it happen. Thank you all of you for coming here, attending this one, all the distinguished speaker and everyone. And I would like to thank two persons without whom, apart from Mr. Mohan, there are two persons which I should thank them, without whom I couldn't take this one up to this level. One is Mr. Mehta Balan, who has really worked out and has done everything, almost everything. And another person is Mr. Sandeep Rewari. He looks after our admin side and he helps us in all the events and everything. So thank you, silently, yes. Thank you, Sandeep, for being there. Thank you very much. Yes, so there is one thing which is left for sponsoring. A small token of appreciation for the sponsor. So if I can invite, Ganesh is here. No, he is here. Yep. Anil, where is Anil? Oh, so Anil, Mr. Mohan, you have to. Thank you, Anil, for supporting us to organize this one. Anil is our member. He runs a wonderful microfinance institution, and he is one of the sponsors for this one. And if we can invite his whole team, please do come. Hindustan has been with us in all the thicks and things. Thank you very much. And I would like to invite the representative of Silver Box. If they are there, they have left. Okay, so we will check it. Okay, thank you very much. Thank you. Thank you for all of you. Yeah, the tea coffee is served over there.
On behalf of NIBM, we thank Sa-Dhan and the team, particularly Sri JG, as well as Dr. Saibal and the team, and all the panel members, all the participants who come across from Mumbai, Pune and other parts. We thank you very much, and once again we will get connected with the future conferences or conclaves. Thank you very much.